Welcome. You're watching India Market Open, and it promises to be a very, very tough morning if you're a trader. The Nifty has seen 4 days of a lower close. 22,700 very likely is going to get tested this morning on back of a weak sort of handover from world markets. Wix is elevated. It's monthly expiry. Tamanna. It's a tough day of trade for the street. I don't know whether this becomes an opportunity for an investor to go in and buy just yet, though.
Absolutely. And, you're seeing global cues quite weak today, a whole host of news that is going to impact the market. You had the S&P sort of outlook upgrade coming yesterday, but it did little to improve the mood, honestly. Then you had after markets the news about Edelweiss ARC getting pulled up. It might just impact the specific stock, but also the broader sentiment of regulatory hangover on the whole BFSI space comes back into play. So that's one factor you'd look at. And then global cues, frankly, have been quite weak. So let's start with the kind of global cues that you've seen overnight. The Dow was nearly 400 points down. I think the only thing that was working in yesterday's market was Nvidia, which was slightly in the positive. But between the Dow, Nasdaq, S&P 500, all of them facing quite a bit of profit booking. The primary reason is how bond yields have inched up, and we'll come to that in a bit. But that concern has now come to the fore at a time when there is a vacuum of any other key trigger. Remember, bulk of the results are also done. Although there is one factor which might see a second consecutive day of weakness in US markets, and those are the Salesforce numbers which came out. Now, the tech company has missed its revenue estimates for the first time since 2006. And the numbers actually came in post-markets close in the US. On the futures side, that stock was down 17% at one bit. And there are various calculations of if that trend continues till markets open tomorrow, you might see another 250 point cut on the Dow. So I would say that the outlook is not looking great as far as global cues are concerned. And like I said, the primary culprit happens to be the bond yields, which have hardened. Till you have clear data talking about the possibility of a rate cut in September back on the table, you're probably going to continue seeing that, and that might come. You'll have jobless data coming in, PCE data coming in towards the end of the week. So today and tomorrow becomes, or tonight and tomorrow night, if I may say so, becomes very crucial from a global markets perspective. But the 10-year is back over 4.6%, and that was a bit of a negative for the markets. Crude, largely benign, nothing much happening there. A soft on lower demand concern. So it's back under the $84 mark on the Brent, and that's the story with crude. But if I pull up Asia also looking fairly weak, at least in open. And let's pull up all of the key indices. Look at the Nikkei, down about 1.5%, nearly 2% now. Crucial data are going to come in Japan as well, inflation data that the market is looking at. I would say Shanghai is one exception, but broadly, Asia also looking fairly weak. Let's pull up the implied open and look at what the setup is for India, up 100 points down, Samina. So we're looking at a fairly tough morning once again.
I think extremely tough morning, and that sell figure from FIs yesterday also could be a little nerve-wracking. So all this while the outlook on India's has been upgraded from stable to positive, but remember, BBB minus is the lowest grade of credit rating for any country. Doesn't reflect the kind of demand that Indian government bonds have been seeing amongst global participants. But it is something that the markets may cheer. But are you going to be happy about this is anybody's guess so far, because it really doesn't impact or reduce credit costs by a mile until there's actually a rating upgrade coming in on the country. But like we said, the markets are going to have a tough morning. Yesterday, 22,700 is where we saw close at. From the kind of data we are picking up, the Wix is looking elevated. Again, we maintained this is on expected line, so no surprises there. Gift Nifty and implied Nifty is indicating to start way below levels of 22,700. Remember, it was only the early part of this week that maximum call OI was seen at 23,000 levels. Those levels, of course, now not turning out to play game in this morning's trading session. Apart from Hong Kong, which is a proxy to China, all markets across Asia are trading weak. So no surprises there that India should see a bit of a gap down in early hours of trade. Now, Niraj, I don't know whether this gets bought into, but if I had to put money on this, a monthly close in the range of 22,600 to 22,700 is probably going to be best. It's unfortunate that global cues are negative this morning, even though I know that we're trying to cheer the S&P upgrade, but it's not a rating upgrade.
Exactly.
And that doesn't mean anything. Of course, I'm on the fence thinking that why do these three guys get so much importance? Because that's just not fair to begin with.
That's a longer story, and even the outlook upgrade has happened after 10 years.
14.
So fair enough to cheer for it. And I'm talking about going from stable to positive.
After 14 years, yeah.
So fair enough to cheer for it, but you're right, it's not a rating upgrade and other things. I just want to pull up the fund flow before we come
big sell number
to the trade setup, and that's fairly important to mark. You had, I would say, DIs try to make up for some of the kind of flows you saw, but FII flows deepening at 5,842 crores yesterday. So that's definitely one factor as well. Most
certainly. Also, I mean, this and even today's FI numbers will be impacted by the clutch of block deals that happened. So today there are 2 block deals in which FIs are actually sellers. So we'll probably see some bit of large numbers out in today's session as well, independent of the natural course, by the way. So that's the limited point. It's not that this was entirely due to that, but of course it gets just a bit magnified due to that. But I mean, higher VIX and expiry moves give you the picture. And election, but just for today's session, just the way, I'm very curious to see how VIX behaves starting tomorrow, post the monthly expiry is over. One keen eye out for that, but we'll have a volatile Thursday, no surprises for that. Usually now, a lot of F&O traders say that a lot of their trade closures actually happen at penultimate day and not on the expiry day. So we've seen some bit of volatility yesterday.
My only disappointment, Niraj, is that banks have had it so rough here. Yeah. In the last 3 days, the amount of selling that's come in banks.
All of BFSI,
I mean, we were talking about 49,600, 50,000, and now a close for the closing the month in that sense is going to be sub 48,000, 49,000. That is disappointing, I think. So any sort of bang that comes in is met with selling pressure.
Just no trend. And maybe rightly so, right? One event happens once in 5 years. It's such a big one this time around. How can there be a trend? So at 23,000, if there was a trend building up, it got sold into. Maybe it will get bought into at 22,500. But just so difficult to call the markets currently with all that's happening. I mean, imagine 3 treasury sales failing in the US, yields moving up, and the US markets coming off as well, right?
I think that could also be to do with what the ECB might be doing. So in anticipation of a rate cut from the European Central Bank, normally they don't move before the Fed.
Yeah, 2 consecutive ones.
2 consecutive ones. So that could be a reaction that you're seeing on the bond deals in the US. So it's unfortunate. It's unfortunate the cocktail globally is not supportive this morning.
Very potent.
But you know, so domestically we're happy to ignore global cues when it's suitable. But the fact is that there's so much uncertainty domestically as well now. So there's no clarity. Just on the BFSI space, I wanted to add that you might see some of that impact. There could be a host of other fundamental reasons on the kind of regulatory headwind. Now, what the RBI did yesterday, and of course it was with one specific ARC, but in that broader trend that the regulator is willing to step in and sort of whip this space into shape as and when they see it, and they're going to be frequent interventions, is something which puts a bit of a cloud over that entire space. It increases your risk over there.
Yeah, most certainly. But valuations are in favor. So at some point of maybe post the election, the thing is out of the way, and FI money comes back, is when banks might see center stage. Interestingly, Helios is starting off a BFSI fund because they believe valuations are so cool. Anyways, I mean, the one pocket, just before we get to specific stocks, the one pocket that I thought was very interesting to note, amidst all this volatility, is defense. And at every dip, these guys are getting bought into because they're delivering results. I mean, yesterday, Mazagon Dock, a case in point, just a very strong set of numbers. And we've seen across the board, at every dip, I mean, a BDL was down for a day, up the next day. We're just seeing these stocks getting bought into despite the valuations because they are delivering numbers. So one pocket that you definitely want to keep in mind, aside of course, auto anchors, aside of course, what's happening to select small cap chemical companies, as a bucket, the pocket which is doing really well is defense. So that should be on your mind if you are a buy on dips player, specifically from a medium-term perspective.
Can you define dip?
In defense, the dip is a day's dip.
No, but to add to the list, the smallest sector that doesn't seem to catch up with the macro sentiment is railway stocks. They live in a little universe of their own, and those stocks continue to gain. And every morning we wake up to RVNL, some order win, and that's reflected in the kind of stock performance. And that might not look great to you, but let's not forget that the stock has actually done quite well on a day like yesterday. So you had your Titagarh, you had all those counters continuing, and shipbuilders, of course. And the good thing about the shipbuilding space is that if you have one stock that does well or reports good earnings, the sentiment very quickly spreads across the other shipbuilding names. So the day you had Cochin report strong numbers, Mazagon and Garden reached it
exactly.
well. Yesterday you had Mazagon report good numbers. You had Garden Reach and Cochin also respond well to those earnings. But we will be talking exclusively to the management very shortly to get a sense of what goes behind those numbers, what lies ahead over the next 3 to 5 years. And with this big push on indigenization and exports, whether it's commercial, exports, submarine, fighter destroyers, it's going to be an exciting chat. So stay tuned for that. But other stocks that we're watching out for in today's day of trade, there are a bunch of them that have reported numbers. Remember, we've got last 2 days of the earnings season. Tata Steel, on the face of it, those numbers look weak, but don't be too disappointed if you're a Tata Steel investor, because a lot of it is one-offs in nature. Yes, their sales price for steel prices are low, which means that the revenue has taken a hit by 6.8%, but the impact on profitability, what you're seeing, is on back of a few write-downs that they talked about in the early part of this year in the UK. That is what is reflecting on a hit on profitability. So there is an exceptional loss of 594 crores and a marginal gain of 11 crores. So the set of clearly not doing too well on the gaining side. Well, apart from that, their margins have also declined, and that is again on expected lines. You've also seen a big jump in coking coal prices, so all those factors put together have meant a weakish kind of quarter for Tata Steel, even though it's beat street expectations. But of course, what you want to focus on with Tata Steel is going ahead, because we've been extensively talking about how commodities and metal stocks could be coming into flavor. Now, whether FY25, 26 will justify that is what we will try and understand from the company when we catch up with them. Well, apart from that, you had a very strong set of numbers coming for Cummins India. Their profits have spiked 54% to report at 538 crores versus 348. Revenue has also gone up substantially, 20% uptick on revenues. Margins have improved, and the board has also approved a final dividend. So all in all, strong quarter for Cummins India. The stock should see a gap up, even on a day like today when the broader sentiment is looking quite negative. I think Niraj has something on Cummins India.
No, just one. The Nomura note on Cummins spoke about the margin surprise, Samina, and they said that the EBITDA margin at 657 basis points YOY. I mean, you get reminded of ABB, Siemens. They're not in the same bucket, but I'm just saying MNC is doing well. They said this came in as a positive surprise because it could be attributed to the higher growth in the high horsepower segment, which is what Cummins is now trying to do in a big way. Retention of pricing power, which is big for them as well, and correction in pig iron prices, which were down about 13% YOY. So two of these elements, which is the pricing power as well as the growth in the high horsepower segment, might actually continue and be more predictable as opposed to the pricing of pig iron. So never know, these margins could actually be sustainable.
Oh, well, if that happens, then you know that the stock has been one of an outperformer. Actually, in the last 5 years, I think it's up, 1,300%. It's been a multi-bagger, to say the least. So I guess those numbers keeping up with the kind of growth and stock investor wealth that this counter has created for investors. Well, another one that we like to talk about, because it's got a little bit of a consumer flavor to it, is Lemon Tree. They reported numbers and on expected lines. It was a good quarter for Lemon Tree, at least on the face of it. They've reported a net profit which was higher by 42% to 84 crores, and total income as well came in at 331 crores. What you want to keep in mind is their revenue, or their total income, was 1,076 crores, which was up from 878 crores. Margins have also improved, and occupancy has stood at 72%. This is translated into revenue per room of about 4,754, which is up by 11%. YOY, they've seen an increase of 14%. So all in all, good quarter, good seasonally strong quarter. Year-on-year numbers have improved, and occupancy also looking pretty healthy. Could be playing out positively for Lemon Tree, guys.
This is one space that has been astonishingly, positive in the last 6 to 8 months. Broadly speaking, perhaps the push on domestic tourism, domestic tourists coming back in a big way, addition of spiritual tourism, etc. I mean, not to say that every listed company in this space is going to do equally well, but it's interesting to see that a very down and out kind of a space has come back with a bang. So yeah, Lemon Tree one. More, I would say, consumer interest or in consumer direction would be Bata. So Bata numbers don't look that bad on the face of it compared to what Bata has been seeing the last few quarters, is how I would put it. So revenue up 2.5%, EBITDA absolutely flat. Margins have squeezed a bit by 53 basis points, and net profit is also down about 3%. But what has happened is their GMs have expanded by 160 bips. In fact, their employee expenses, etc., have seen a decline, but they were offset by other expenses, and EBITDA margins have contracted, like I said, by about 50 bips or so. But I would say in the past few days or the past few quarters, the kind of performance we've been seeing from Bata has been consistently negative. So maybe in a relative term, not too bad. SJVN is one, though, which I'm interested in seeing how the street reacts to it, because SJVN is one of those other favorites when it comes to the entire space, renewables, economy facing, etc. And also a reflection of policy push, but the numbers are not too great, to be honest. So revenues at down 4.2%, EBITDA down 22%. Margins have also squeezed quite a bit at 49.6% versus 61.3%. So quite a drop in margins. You're seeing net profit up because of a lot of one-time kind of items and one-offs. So that could be a bit misleading when you see a 3.5x increase in net profits. Suffice to say that not a huge sort of positive on the first glance as far as the numbers are concerned. They've also announced a pact with Indian Oil for a JV in renewable new tech projects. Having said that, this is one company which gives you an opportunity to play the whole renewables game. So which is why it's been a street favorite as well. Can we just pull up the one-year chart for SJVN and how SJVN has been consistently performing, and maybe that's a reason why the street has bet on it. 288% in the last 12 months. Just the last sort of set in this list is, we've been talking about the impact of the S&P note yesterday, and there was an impact for specific stocks as well. So ONGC, for example, S&P Global changed its outlook from stable to positive because the company has stronger standalone credit profiles. ICICI Bank also, S&P Global Ratings affirmed the rating and revised the outlook, again, positive to stable. So while they did that overall for India as an economy, there was that move for certain specific stocks as well. We'll wait and see if it has any impact at all, or whether the overall mood sort of suffuses this. For SBI as well, for State Bank of India, S&P Global Ratings has revised its outlook from stable to positive. So that concurrent move.
Add to that list, Tamanna, there's also Axis, ICICI Bank, HDFC Bank, Kotak, and Indian Bank.
So good news for BFSI.
If there's any hope that you might see some buying in PSU banks today, then
FIs have to come back for that. But yeah, maybe. But no, absolutely. I think just in the broader story, it's heartening to see that a very core important sector like BFSI has also gotten that upgrade in a sense.
Most certainly. And we'll talk about this particular stock in detail on the editor's cut. So I won't talk too much about it because Vishy knows it inside out. But Edelweiss could be in focus because of, since we're talking about BFSI, Edelweiss could be in focus because of the ARC being asked to stop any fresh intakes with immediate effect. You watch out for that one in the session today. But sticking to results, KNR Construction, you can argue in cricket fashion. I mean, the Cricket World Cup starts in 3 days from now. Hit the ball out of the park, really. Not on the revenue front, but on the margin front. Revenues are up 13.5% at 1414 crores versus 1245 crores. Not bad. But look at margins. 26.4% versus 19.6%. It did a Cummins and some more, by the way, as a result of which, and plus some other income included, PAT was up 2.4x at 341 crores versus 142 crores. Remember, what also aided this PAT growth was 125 crores of other income versus just 10 crores in the corresponding quarter. But the margin uptick is real, it's showing, and it could well result in the stock do well in the session today. So do watch out for KNR Construction in today's trade. I will watch out for a small cap stock, Indigenous. Revenues were up 6.5% at 673 versus 632. But again, margin expansion story out here, 20.6% versus 15.4, and as a result of which the PAT was up 94% at 94 crores versus 48 crores. Good showing for that one too in the session today. So do watch out for that one. And well, there are a lot of other names, but I'll just quickly look at the third stock in my list, and that is Healthcare Global. So Healthcare Global came in with numbers again where the margin expansion was strong. Revenues are up 12%, but margins at 18.4 versus 17.1, as a result of which profit after tax 23 crores versus 6 crores, again, could react positively.
Just a quick one that I forgot to mention is while Tata Steel, of course, reported numbers, brokerages have said that they don't seem too disappointed. So Jeffrey's case in point is optimistic on it. But in the same breath, I believe there's a board meeting of JSW Steel. So we are anticipating a fairly significant announcement in a segment that is globally dominated by ArcelorMittal and POSCO. This announcement is expected at 9:30 a.m. So we will bring this to you as soon as we get that. Niraj, you mentioned a few block deals. I think you've got KFIN and IRB Infra as well. So 4% stake sale in IRB Infra on a little bit of a discount is what the market should be expecting. 1,500 odd crores might be sold into an IRB, adding to KFIN.
So KFIN Tech, no, I didn't speak about it. KFIN Tech, General Atlantic to sell at about 712, which is a 4% discount, 6.8% equity. IRB Infra,
yeah, that was upsized from 4.1, so
right.
It's actually that's happening.
So that IRB Infra, and I think CLSA is the broker to the deal,
yeah.
But that's the second one.
And that price range is 63 to 70 to 70.
Okay.
So it's a little bit of a discount to yesterday's close. So you want to keep that in mind.
That
70
too?
to 70 was yesterday's close. The lower price band is 63 on IRB Infra. That's what the expectation is.
And apparently there is one more, RR Kabel,
yes,
wherein TPG will sell its entire 5% stake. So a clean out trade, the stock was down yesterday already.
Should go
if the clean out trade gets absorbed well, the stock could actually do well, but it's at a discount of about, maybe likely discount of about 4-5%.
I would think it also depends on how the market mood is overall. Yeah. You talked about ECL briefly, but just a little more detail before we go to the editor's cut, of course, where there is more detail. So they have now put out an exchange note this morning clarifying that RBI's order to cease and desist was something they had already passed a resolution on to discontinue their wholesale business. They claim that the directive will not materially affect the company's strategy and business, and reduction of wholesale exposure to continue as permitted. But having said that, do expect a sentimental impact definitely today.
Yeah, and you have a listing this morning, Office Solutions. It's going to be office. Yeah, so it's a tough morning, guys.
Yeah, no, just there is a Nomura upgrade on. Man, I'm forgetting the stock now. Anyways, there is a Nomura upgrade on Eureka Forbes. They've reduced the price target, but they've upgraded the stock to a buy. And there is Shriram Properties, which gave out a fabulous guidance on pre-sales, so that could be
active. And a street favorite, RVNL, it's another order win for them. So that too. But nevertheless, sentimentally positive.
But anyways, so that's the long and short of a lot of stocks that might react today. But like we said, we'll talk about the market sentiment and stocks in the session today. Alex, what do we have today on the editor's cut?
So I was itching to say bad day at the office when you were talking about the new listing, but then
we're having a great day this morning, though.
But having said that, let's start with the two topics that we're going to be discussing today. I'm joined by Muralidhar Swaminathan as well as Vishwanath Nair, and we're going to be talking first about the regulatory action by the Reserve Bank of India. We will also talk about the S&P Global upgrade on the outlook. But interesting, because Tamanna was just talking about what the statement from ECL reads, and they apparently are saying that there's no major business impact. And I saw Vishy, wryly smile about this, because it is going to be a significant impact, Vishy.
Yeah, so if you were to just look at where the business is at ECL Finance, right, 6,300 odd crore worth of loans on its AUM, on its balance sheet, and 4,150 crore of that is just wholesale loans. So to say that, there is no financial impact because last year we decided to shut down this business,
would be patently incorrect.
Yeah, I mean, so it doesn't hold water simply because even if you were to say, do something with these 4,150 crore of loans, right, you can't enter any structured transactions, which means essentially you will have to wait till these borrowers pay you back and then close the account, which in the current scenario looks highly unlikely because these assets have been on the books for a very long time. Borrowers have not been able to repay that money. And according to the RBI's order, which I'll come to in a bit, there were issues with the way those loans were being dealt.
Okay, so let's talk about, so first, it's not right to say there's not going to be a business impact, but let's talk about why this came to pass. There are two aspects as I understand it, right? One is round tripping and the other is, pushing the can down the road. How does it work?
So here's how the RBI explains it. Essentially, what ECL Finance did as an NBFC license holder was that it sort of acquired assets from across the Edelweiss group, which means that there are a bunch of funds which would have lent to some real estate companies, some other wholesale companies. Yes. So you acquire all those assets. Collate them, and then you sell it down to the ARC. Now, the problem, as you said, twofold, is the first one is the conduit aspect, which the RBI points out that ECL Finance allowed itself to be a conduit in the entire business. The ARC, once it had acquired the asset, they were also allowing funds from within Edelweiss Group to come into these companies. Therefore, the question of evergreening comes up, because evergreening is essentially that. You keep funding an asset so that it stops looking like an NPA. But these two problems is what prompted the RBI to take this action. And it's not something that happened overnight. The RBI has been talking to them for months on end. And what the RBI said is that instead of fixing it, these guys went ahead and did more complicated transactions.
But NBFCs are allowed to sell to ARCs. But
ARCs can only buy from banks and NBFCs. That's the RBI norm. But because the other entities in the group could not sell to the ARC, ECL was the route to transfer these assets to the ARC.
And that's the primary problem.
That's the primary problem.
So what happens from here?
From here on, you have to fix it. Well, you have to ensure that your compliance measures are in place. Your assurance function is strong enough to pick up any issues within the bank, within the entity, and the RBI has to be convinced that it is strong enough now. Now, that's the tough part, because convincing the regulator that we have done whatever is needed is something that companies typically take a long time to confirm. And because typically in other cases, the RBI asks for a third-party audit, in this one, they've not specifically mentioned that. So it entirely depends on the RBI's interpretation of what you've done.
Very quick last question. Of course, we'll see in just about half an hour's time. Beyond the sentimental impact, it's likely to be a business impact as well?
From what I can say, yes, because the NPA numbers are going to shoot up for ECL Finance. Edelweiss ARC's growth comes under question because it cannot acquire, it's acquiring and then resolving, right? So if the acquisition window is closed, you'll keep running down your AUM eventually.
Okay. Fair point. All right, so that kind of answers several questions that you might have about ECL Finance and Edelweiss ARC. But the other big headline that we have been speaking about since yesterday has to do with the S&P Global upgrade on the outlook for India's credit rating. And Murli spoke with Siddharth Sanyal, and here's what he had to say about where India's rating should be.
Well, it's welcome that S&P and other rating agencies are noticing our strong and robust economic and macroeconomic indicators. So it's good that they have, put us on positive watch. But let me say that by any objective criteria, India should actually be rated 1, if not 2 notches above where it is right now. So in a sense, they are behind the curve. And if you look at Indian paper that, corporate paper of Indian companies that float abroad, you will see that they are almost always much tighter than, similarly rated sovereigns. So the point I'm making is that India is much better position even than what S&P is making it out to be.
My apologies to Mr. Sanjeev Sanyal. I got his first name wrong. Let's talk about what Muralidhar Swaminathan is saying and taking from these numbers, because it is quite the statement that you're making, Murli.
Absolutely. I think I'm trying to go against the tide. Yesterday, the markets completely ignored this. But the point I'm trying to make, Alex, is that markets may have ignored for different reasons, but a long-term investor should not ignore this news. The reason why I'm saying long-term investor should not ignore is that this is one of the biggest actions that have come in the last 14 years or so. I think since 2006, the first upgrade from S&P since 2006 in terms of outlook. And it's the first rating agency to upgrade us post-COVID in terms of outlook. Now, this is only about outlook. We are not talking about rating. Now, that's a bigger action, but this is the first critical step towards rating action, which will happen roughly in 2 months. Now, I will add a couple
2 years, you mean?
Sorry, 2 years, not 2 months. So 2 months is budget. My apologies. So roughly in 2 years is what rating. I think for the first time they've set a very clear timeline that this could lead to a rating upgrade. If that happens, that's a big deal. Now, how does this connect with the markets today? The markets are nervous about the political results outcome, and that is for people who are doing trading. Now, if you are a trader, you will end up either winning or losing depending on how you take the bet. But if you are an investor, you will definitely win over the long term. Now, how will that play out? That will play out the following way. One, the new budget will come through, and the new budget will clearly take into account the extra 1 lakh crore that they've got from the RBI, and that can be put to good use in helping bring down the fiscal deficit, which is at the center of this S&P rating. Now, if that happens over a period of 2 months, you will see that the rating agency's outlook will change. Outlook towards us.
It's an interesting point, because just to add to that, 50,000 crore was the divestment target for FY24. Previously, it was cut to around 30,000 crore, and I'm actually not confident or sure as to whether or not that was hit. We'll know soon enough. But this 1 lakh crore that has come additionally from the RBI serves to bridge that gap.
Absolutely. So the point now is, see, I'm sticking my neck out. I'm not saying that the markets will open gap up today or the markets will react to that. We will know when the markets when the markets open. But the point here is that if you've been missing the bus for the last many months, simply because the Nifty went from 1,000 points every once in a month or so, from 19,000 to 23,000. So every dip is now an opportunity for a long-term investor. Now, what should a long-term investor do? Do conviction buying, go contra, don't worry about the political noise. That's for the traders. Now, politics will continue to play out, but policy will not change. Over the last 30 years, in fact, that is also recognized by the S&P rating agency. Over the last 30 years, policy has not changed. The governments, in spite of the turbulence, political turbulence you would have seen over the last 3 decades or so, the policy continuity has been there. Now, that's going to continue. The other important point, which I think there is a Citi note which is taken into account, is that the 80% of GDP, that is the public debt, which is above 80% of GDP, cannot be brought down to the 60% level, which was a pre-COVID level. Now, that is not a precondition for S&P upgrading the rating.
It used to be, though.
It used to be in the past. So that is not a precondition. So the point here is that I'm not saying you should go out and buy today. All I'm trying to say is that this is an excellent opportunity. The market will ignore it for now, for obvious political results reasons, but it may come back. But when it comes back, you may not have the opportunity.
Okay, that's a fair point to make. Let us know what you think about the upgrade in the outlook. And meanwhile, we've got F&O action to talk about, and it's a crucial day, remember, because this is monthly and weekly expiry for the Nifty 50, and we'll be back before you know it. Do stay tuned.
Welcome. This is India Market Open. We're taking stock of the futures and options space at the moment, and we're in fact taking a look at how things panned out yesterday. It was a tough expiry, where the Nifty came off by around 0.8%. And in terms of the rollovers, let's take a look at that and how things have panned out. Rollovers standing at around about 55% for the Nifty. Well, that's not the best when it comes to the mark at the moment. Of course, we have an entire session before we actually see this play out. Today is the weekly options expiry, the monthly futures expiry as well. So a lot of these factors will play into choppiness for markets, at least as far as the Nifty is concerned, and it has not been bereft of volatility over the last few weekly options expiries either. When it comes to the bank Nifty, yesterday was the day where we did see those options expire. In fact, even on a monthly basis, we saw the futures will come through in terms of expiration. We're looking at the June series. At the moment, we're seeing a little bit of an uptick when it comes to positions being built. A lot of that, I reckon, will be taken keeping in mind the first week of June. That's when we have the outcome of the general elections. But let's move on and talk about the options market then. Since the Nifty came off, perhaps on expected lines, we did see a lot more action in call writing as against put writing. But day before, all the writing action was around the 23,000 call. Yesterday, we saw that will move over further down towards 22,800 and 22,900 strikes. In fact, in terms of change, the 22,800 call was where we saw the most amount in terms of writing coming through. Is this a sign of what we can expect today? That's a wait and watch on that one. But as far as your overall open interest distribution goes now, keeping today's expiry in mind, well, 23,000 call is the one with the max OI. On the put side, it's fairly evenly distributed. So we're watching out for strikes around 22,500, 22,600. This is as far as your intraday is concerned. As we move forward into the 6th of June expiry, again, a very, very important one, you will notice that until the day before, we did have a lot more traction, around the 23,500 calls. But all the action has now shifted back towards 23,000. And at the moment, we are looking at a substantial amount of call writing around the 23,000 strike. This is the 6th June expiry, mind you. And not as much in terms of puts, but of course the puts still stand as far as the 23,000 mark is concerned. Of course, in the lower end, we're continuing to keep an eye on 22,500, where we have a little bit more traction as far as puts are concerned. Now, moving on to stocks. It wasn't exactly a very encouraging day. The market breadth was towards the declines, and we've seen that in the future space as well. Shorts for Ipca Laboratories, Dabur India, IOC, along with Canfin Homes. Abbott saw marginal gains, so we saw some longs there. And in terms of stocks which are unwinding, let's pull that list up as well. Well, short covering for ABFRL, Hindustan Copper, Biocon, and Vodafone. Well, that said, the question really is that what do you do with these markets? Over the past few weeks, we have Rahul Ghosh of Hedge.in, who's joining us on the show right now. Rahul has given us some very, very comprehensive strategies to work with, especially keeping the first week of June in mind. Rahul, good morning. Thanks for joining in. What's in store now? If you could give us an update about how you're reading markets at the moment, because not really, not much has changed except for the fact that we've seen the Nifty make a new high and then retrace, take a step back to a certain extent. What's the way forward now?
Good morning and thank you for having me. So firstly, we're talking about our previous strategies, just to inform all viewers that the last two strategies paid off very well. They were on the bullish side, and when Nifty went to 23,000, all those strategies paid handsome dividends. Coming specifically with respect to index now, it's very interesting. If you notice the kind of positions the bigger hands are creating for the election, you'll notice that there is a concentration at 23,000 like you were showing. So 23,000 straddles are being created of the June end expiry. But very interestingly, the offsets of that 23,000 short straddle is June of 22,000 and 24,000, but is also of July 22,000 put and 24,000 call. Now, what this essentially indicates is that they're not expecting more than 1,000-point gap on either side, which is one side of the story. But the second part of the story is that they're expecting volatility in the second half of June or in the month of July, which is very, very interesting. That is that the big event might not cause a big move, but the follow-on can cause a big move. And when I say big move, they mean 1,000 points on either side. So that is the popular consensus of big players currently going in now. the tinge is still on the bullish side. So the strategy we would suggest would still be on the bullish side today.
Rahul, what kind of an option structure are you looking to deploy in markets like these?
So we're going to keep it fairly simple once again and not go for 3 and 4 legs. We're going to do a bull calendar call. And we're going to do it once Nifty gaps down today about 50, 70 or 90 points as it currently suggests. So what we're going to do is we're going to buy the 23,200 call of June end expiry, which is trading around 400 rupees. Currently, it should be about 360, 370 with the gap down. And we're going to sell simultaneously the 23,500 call of 6th June, which is currently trading around 180 odd rupees and which might trade lower once the gap down happens. The strategy is completely protected because 50% of the credit you're getting right in the first week of June. Now you have 3 more expiries to keep selling calls and getting more credit. And if the market moves forward or upside beyond 23,900, I beg your pardon, 22,900, anywhere in the June series, the strategy starts paying dividends. So buy 23,200 end June, sell 23,500 of 6th June, a bull calendar call. Risk is small, as you can see, about 1,500 odd rupees, and the reward can be handsome depending on where Nifty closes on 6th of June.
For the sake of all those who are new in the options market, can you give us a further idea about the differential of implied volatilities in the 6th of June and the subsequent expiries?
So implied volatility or IV affects closer by strikes more than further away strikes. That is the first thing you need to keep in mind, or the viewers need to keep in mind. But the advantage of selling the 6th and buying the 27th is that the 6th is going to expire much faster than the 27th, because of which 27th would still have a lot of time value left because it's out of the money and there's still a whole month left. But the 6th, in case markets don't go up or remain sideways or moves to the downside, would straight go to zero because it is far out of the money. Why have we taken out of the money strikes could be a question to your viewers. The reason for taking out of the money strikes is so that the buy and sell legs come close to 50% of the net debit paid. That is why we've gone to out of the money. And historically, if you do a statistical analysis, you will notice that whenever you have 50% of the debit credited to you in the very first week, the chances of success significantly move higher.
A final question then, Rahul, when it comes to this specific option structure, one, at what point in time are you making exits towards profitability, towards loss? And also in terms of time, are you moving out on a Wednesday before the weekly options expiry? Are you waiting out all the way through expiry? How are you making those exits based on time?
So 2 ways in which you can exit this position. One, if you get about 2-3% by 6th, which is about 1 week, good return of 2-3% in a week. So you can take your exit. Secondly, what you can also do is, in case you don't get a favorable exit and you still see that there's been a good big bang up move and markets have crossed 23,000, you can lock in some profits or look for a higher profit by continuing to sell calls, because 23,500 will still go to zero even if markets are at 23,400. But when you sell the 13th June call, you will still get significant amount of premium over there. So ideally, you should look for about 2-3% before 6th June. You could look for higher percentages depending on if Nifty is above 23,000 or not at the time of the first expiry. But yes, 6th June is where you should look to book your profits if the trajectory is towards the upside.
Fair enough. Well, Rahul, thank you so much for joining us and taking us through your views on the markets, also explaining and going through this particular option structure that you have suggested. That's as far as the Nifty is concerned. Again, I can't rule out choppiness because of that big event coming through. We'll continue to give you updates and, of course, continue to give you more strategies as well through the course of this upcoming week. With that, it's back to you all.
All right, thanks for that, Agam. And Nifty expiry day, so it's going to be monthly expiry day, so it's going to be an exciting one to watch. Just want to quickly pull up the implied open before I go to Avinash Gorakshakar, who's joining us now on the show. Still about, looking like a tough morning. Avinash, good morning. Great to have you on. Now, how would you play the next 48 hours, Thursday and Friday trade? And especially, till the dust clears on the monthly expiry, what would be your strategy right now? What would be the kind of stocks that you would look at?
Good morning, Tamanna. I think it's a good opportunity to start nibbling, because there's a lot of uncertainty on the exit polls, which would be starting from Sunday onwards. I personally believe that, once the final result is out on 4th of June, the markets would definitely, welcome it positively. And I think broadly markets are expecting anywhere between 350 to 380 assembly seats for the NDA government. So I think this is on course. So I think this kind of uncertainty is nothing short but a sentimental kind of reaction to the market. There's no panic. I think fundamentals continue to be strong. Within the given scenario, I would suggest that there are some interesting companies which came out with very interesting numbers. There is a company, Tamanna, which is called EFC India Limited, which has come into the limelight after the recent IPO of AWIS, which is into co-workspaces. This is an existing player from Pune. Enjoys a market cap of more than 2,000 crores. And currently for FY24, they have reported a top line of 428 crores, a bottom line of 63 crores, which is excellent. Compared to AWIFS, which is loss making for last 3 years, operates in the same business. Of course, EFC is a small player. They have a overall size of 1.5 million square foot. Adding capacities very aggressively, present in 6 or 7 metros. So I think, these are interesting bets which the investor should look at, because this is where the alpha will get, generated. Our sense is that over the next 12 months, one could easily expect a price of at least, 525 to 530, because fundamentals continue to be very strong. Very marquee investors like Sage One have invested in this company in a recent preferential issue. So I think all said and done, these are interesting bets. Another interesting company is Marine Electricals, which not many people track. Company has reported a very strong top line of 670 crores, a bottom line of 25 crores compared to 16 crores. The company is into data centers. The company is into marine electrification and actually caters to a lot of marquee customers like Cochin Shipyard, Mazagon Dock, Garden Reach. So it's a defense play and a data center play. I would not be surprised that this stock today could see a lot of action, despite the fact being, the market being volatile. I think our fair value is around 140 to 150 here. So I think, one has to be stock specific. We would stay away from the large caps for the time being. And I think we would just look at certain, good quality mid cap, because these stocks are not going to be dictated by the market, sentiment or maybe the Sensex or the Nifty moves. And clearly these are positional bets. So I think all said and done, investors should use these opportunities to get into good quality stocks where the alpha over the next 6 to 12 months could be very attractive.
We also have with us Shrikant Chauhan of Kotak joining in. Shrikant, the last 4 days have been rough. This morning we are staring at a start closer to 22,600. Global cues are weak. Volatility index is jumping. So option premiums are expensive. And it's monthly expiry, which in the last couple of expiries, we haven't seen it too active on the day of expiry, is what Niraj had pointed out as well. But if we do get a start at 22,600, would you initiate a trade for the June series potentially?
Yeah, good morning, everyone. Yeah, I think the broader trend of the market is still bullish. It is currently into corrective mode. We saw spectacular rally from the levels of 21,800 to almost 23,200 sort of levels. And from there now it is correcting back. So whatever the correction that we are going to see, I think it should get somewhere close to 20-day simple moving average, or maybe 50 days or 50% retracement of the entire rally. So around 22,500, 22,600 or between these levels, we should, I think the market should stop and reverse. Even put call ratio, if we see the put call ratio of the current series, then there also we saw a deep down activity. It is down completely. So based on the overall setup of the market, I am of the view that today, yes, if there is any lower opening, then we should look for taking or creating long positions for the next series between 22,600, 500 levels. With a stop loss, we can keep at 22,500 for short-term traders. I am expecting market to again rebound to the levels of at least 22,800 to 23,000 in the near term.
If that is the view, Shrikant, and it's an interesting view, what pockets of strength would you look at? And also couple that up with your stock ideas for this morning.
Yeah, good morning, Niraj. I think, global macros are not supportive. And in that, if we see the 10-year bond yield, then it is around 4.6062 levels. But I think for next few days, the market is going to focus on domestic flows and domestic news flow. I think that's the reason we should look for taking position if there is any correction in the market. In that particular space, I would like to go with stocks like IRB Infra, GMR Infra, NCC, where there is genuine interest. But in that specifically, GMR Infra looks good. It has spent a lot of time between the range of 88, 89 on the high side, 80, 82 on the downside. On the back of results and also on the back of technical formation, we are expecting stock to move towards at least 95 and maybe 100 in next few days. So GMR Infra, GMR Airport looks good at current levels to buy with a stop loss close to 84 rupees. And also, if we just go through with the other specific stocks, then in that yesterday we saw some buying interest in fertilizer companies. GNFC, Chambal Fertilizer, Deepak Fertilizers, all are showing a lot of strength. But in that, Deepak Fertilizer looks very strong candidate because it has spent a lot of time between this 550, 560 levels, and now it is trying to absorb the selling pressures. So at this level, it's a buy with a stop loss close to 545. We can keep a target of 600, 610 on the high side. So fertilizer as well as infra companies should be on the watch list in the near term.
That's the word on infra companies. A quick one. I just want to, before we go over for the election trade, Avinash, you want to come in on what you made of Mazagon Dock's earnings? We saw all those shipbuilding companies do well in trade yesterday. While revenue, profits I know have doubled, but their revenue hasn't sprung up substantially. So how have you read those numbers?
No, I think my guess is that some order execution has got delayed. So probably you could see a bigger ramp up in the revenue in the first quarter or maybe the first half of FY 24-25. The best part is that the company is sitting on a very healthy order book. So I think revenue visibility is pretty strong. I think markets are more concerned and happy about the profitability part. And I think, as you rightly mentioned, Cochin Shipyard, Garden Reach, their comparable peers have done remarkably well. So I think there's a slight disappointment on the top line growth. But yes, I think going forward, my sense is the management obviously would be making an effort to ensure that revenue growth also is equally healthy. So definitely nothing to worry, but yes, there could be a little hiccup in the stock price considering the fact that all the stocks within this space have jumped quite significantly. So net numbers are good, slight disappointment on the revenue, but I think nothing to be concerned about.
We will talk to the management to get a sense of why the revenue number looks soft, especially when there's so much euphoria and their order book also is substantial at this stage, like you said. Shrikant, on the charts, you want to come in on this? Mazagon, despite those numbers, gained 11% in trade yesterday. On deeper analysis, of course, it doesn't seem as good as initially anticipated. Across the shipyard builders, if you do get a gap down, which one would you go long on? I know they're not in the F&O space, but on the charts?
See, like all these shipbuilding or the defense-related companies, we are seeing whenever there is a correction in the market, there is specific buying interest. And based on its technical formation, again, the stock has made higher bottom close to 3,050, 3,060 levels. So in case if there is any correction in today's date because of the weakness in the market, then close to 3,150 or 3,100 levels, I think those who are interested in buying with a positional view, they should look for adding this stock. I am of the view that broadly the stock is heading for at least 4,000, 4,200 in next few weeks. It will take some time, but the way there is a range sort of activity, I'm going to say there is whenever there is a rally, we see expansion in the overall trading range. So based on that, I'm expecting stock to move towards 4,000, 4,200 and buy if there is any correction up to 3,150.
So Mazagon in focus. The street is very, very excited about this one company, and I saw an interesting tweet. ये ship बना रहे हैं कि plane, because वो rocket जैसे stock price भी ऊपर जा रहा है. So that's definitely one to watch out for. We'll have an interesting chat with the management as well about where the further upside is. And one thing that I'm definitely interested in knowing is that they are tasked with building India's first indigenous submarine. So all of that and more, but very short break. When we come back, pre-open rates in a very special presentation of all of the various notes coming in on election outcome scenarios. What could happen, what each house's number is, and what would be the likely impact. All of that after this break. Welcome back. The biggest buzz right now is on the 4th of June, dare I say on the 3rd of June, when you'd have the first cut of exit polls. Now, everyone has their own number, and we've put together a set of at least 6 notes from various houses on what their scenarios are for the kind of numbers that the BJP and the NDA plus UPA could see when result day comes around. Mahima has got that compilation ready. Yes, Mahima, what is the broad consensus?
Right, so the broad consensus is that they're expecting BJP to have around 290 votes and overall NDA to have around 320 to 340, anywhere between 320 to 340. I'll start with Bernstein first. They're saying that, you know, the bullish scenario is where BJP alone gets 290 and NDA gets 340. Immediate market rally is expected, followed by a short-term profit booking. They're also saying that Nifty in this year, if that happens, will give high single-digit or low double-digit returns. Now, in terms of sectoral impact, they're expecting the infra and capex run will continue, and a gradual recovery in rural consumption is what they're expecting. They're also saying that a heavy focus will continue on manufacturing, and inflation will mostly stay within the range of 2 to 6%. Then, in terms of a base case scenario, they're expecting BJP to get around 260 to 290 seats and NDA to have around 290 to 340 seats, where they're saying that mild profit booking near term will take place and high single-digit market returns will take place in this year itself. In terms of sectoral impact, 3 key takeaways will be that gradual recovery in rural consumption, again, private sector capex will pick up if that happens, and manufacturing schemes will likely to continue. Now, there was an interesting Nomura note also with numbers again, where they're saying that if NDA returns, now their note is more towards how economically it will impact India. They're saying that if NDA returns, medium-term GDP growth will be around 7 to 8%. They expect rate cuts around 25 to 50 basis points in FY25, and Forex will remain stable in the first session, and short-term rally will immediately take place after the results. Now, in terms of INDI, if that alliance wins, they're expecting GDP to dip between 6.5%. Short-term rally in equity is expected again. Now, in terms of JM financials, well, what they're saying is that they expect BJP to comfortably retain majority. However, Karnataka's outcome may tilt policy towards populism. Moreover, they've said that BJP at 299 seats is their base case scenario, and bear and bull cases were range of 290 to 310 seats. Now, they've also said that if BJP comes into power, policy continuity will ensure opportunities in defense and capital goods space, and valuation comfort is in private banks and the consumer space. And overall, they expect the large caps to outperform the small and mid cap post the election cycle, which has not been the case so far. And lastly, a very interesting note by CLSA on Modi stocks. They've identified 54 companies at Modi stocks, which are direct beneficiaries of policies that are made by the government. Half of these are PSU stocks and capex infrastructure linked stocks. In the PSU space, we have stocks like ONGC, NTPC, NHPC, SBI, PFC, IGL and Mahanagar Gas. In the non-PSU space, we have stocks like Ashok Leyland, Ultratech, L&T, Airtel, Indus Towers and Reliance. And what they're saying is that 90% of these Modi stocks have outperformed the Nifty in the past 6 months. And they expect the rally to continue for a short term in case of strong election result. However, they're also saying that narrow election theme-based rally may end in June to July, and they see banks as the best risk-reward India growth in the second half of FY24. And lastly, their preferred non-banking stocks includes Zomato and DMart. So this is the overall view of a lot of brokerages that are making out, post the elections, how will the markets react to.
Yeah, I would say congratulations on managing to squeeze all of that information into that short capsule, because there are a lot of notes in there. And what I found interesting, you guys, is that at the end of it, even if there is a pre-election response, by the end of June and July, it all peters out. We are putting so much on the back of what the number is, and then now narrow focusing on the BJP numbers, sub 300, plus 300. I think the market is kind of losing focus on the big picture, which is how much you need to actually run a government. And, there seems to be little doubt of what the outcome will be there.
Yeah, true. I mean, for the next 7 days, maybe the near-term numbers will matter. Eventually, I think the market will come around. So even if there is a disappointment, if the number is lower than the 300 number, and if there is a disappointment, it will be short-lived. At some point of time, the market will realize that, hey, this is what it is. Anyways, Mr. Market somehow usually knows it best. So let's wait and see what happens in the next 3 days. But I'm very excited about what happens on the 3rd as well. Not just the 4th, because it could be a very interesting day of trade.
We made that argument yesterday about why 3rd would be more important than the 4th, looking at what has happened in the last 3 elections. So right from 15 years of data, it shows you that. Pre-open rates now on, and in the first cut, you were seeing another day of weakness, at least for HDFC Bank and ICICI Bank. So BFSI maybe will have a tough time. We'll see what's happening with the key indices as well, the Bank Nifty, etc. But HDFC, ICICI, Axis, all of them under a bit of pressure, at least in the first cut of pre-open rates. Avinash, just wanted to get your take on all of the numbers that we've talked about, and was wondering if you had your own estimate of what happens on the 4th of June and how markets will react.
I think my guess is, anything above 330 to 40 Tamanna should be a reasonably achievable number for the NDA. And I think, once the government, the market has already discounted that NDA is going to come back. Now it's a question of margin of victory. So I think typically anything below 300, as Niraj pointed out, is something which is going to be concerning. I think it will be a big disappointment if NDA is anything below 300. But anything between, say, 325 to 350 is a respectable number, and I think that would, please the markets. I think that is what our thinking is. So I think, the 400 number may not be possible, as was, declared by the BJP government earlier. But I think between 325 to 350 is an optimistic number, and a worst case scenario is anything below 300.
Well, let's pull up some stocks which might be reacting. It's early days as yet, but Cummins India should definitely be right up there, and let's see how the reaction is to that margin uptick that Cummins has shown, because we've seen Siemens and some of the others react very, very strongly. Cummins for now, okay. The other one is Tata Steel. To its numbers, the beat, if you will, but no, Tata Steel not reacting either. Edelweiss should be seeing a slam dunk, so shouldn't surprise anybody if Edelweiss is down 20%. Yes, indeed, no surprises there. So this, and then some others, maybe a Shriram Properties, RHI Magnesita, some pretty good numbers there in that block, and maybe some of those stocks could be reacting as well. Avinash, if somebody has Edelweiss in the portfolio, right? Is it good to, because it's kind of, been around trying to do a lot of things, but the stock for the longest time that I remember is between 60 and 70 or 60 and 80. It just doesn't go anywhere else. Would you, if you get a chance, would you get out of it and get into some other NBFC?
I think, Niraj, we have been telling our clients that instead of Edelweiss, I think, the recently listed Novoma Wealth is a much better bet. I think the business is extremely profitable. The tailwinds are very strong. So I think, rather than putting money in the flagship company, and where now recently some regulatory issues have come up, I think it would be a wise decision to shift to Novoma. I think Novoma, is a very dominant player in the wealth management space. And I think that is where I think the markets are quite positive. I think over the next couple of years, we could see strong kind of tailwinds in this sector. And Novoma has actually posted very strong numbers for FY24 with an equally strong, management commentary.
Right, that's Novoma for you, down about 1.5% in pre-open trade. Cummins India should be seeing a big move, while Jefferies remains neutral on the stock. Despite good earnings, the stock doesn't get too much of an up movement trade. A quick check on Nifty in pre-open trade. We were expecting a start around 22,600, and if it's not as bad as what implied, or maybe it is. 22,615 is what we have on the index. Bank Nifty will be important. You will have some banks that may see a little bit of an uptick on back of that S&P upgrading the outlook, not the rating on some of these banking names. But for now, no positive reaction coming in just yet. Shrikant, you want to come in on some of these railway stocks that had a decent run yesterday, and this morning, of course, RVNL has won an order. I know it is a small order, but nevertheless sentimentally positive. Anything on rail counters that still looks good to buy or go long on?
Yeah, Samina, I think whenever there is a specific buying momentum in the market, and when it corrects and again starts moving upward, we see specific buying interest in railway as well as defense companies. And whenever there is a correction, the correction is lesser than the expectations. This time also, I think RVNL is now showing a lot of resilient activity. It is relatively doing much better. In fact, there is news flow for the stock on a regular basis. But at the same time, if we see the overall technical formation, then there also we feel that the stock has completed its first leg of correction between 350 and 250 levels. Now, again, it is moving towards the levels of maybe 440, 450 in next few months. So it will take some time. But I think in last 3 days, after correcting to the levels of close to 360, 365, it looks attractive at current levels around 375 with a stop loss close to 350. Again, we can expect 400, 420 on the higher side. And the other stock which we like is Railtail, because there also the relative outperformance is much better. It is around 415, but we are targeting the stock to move towards at least 470, 75. So again, here also, if we see any correction in today's date, it will be an opportunity for traders to buy for. It's a buy around current levels, more on dips with a stop loss close to 390.
Okay, well, watch out for some of Railtail and some of these as well. But let's talk about an interesting brokerage note today. An interesting brokerage note by Nomura. They've upgraded Eureka Forbes to a buy, but have reduced the target price, if I'm not wrong. Puneet Johnson with the key highlights of that brokerage note. Puneet, good morning.
Hi, good morning. So, regularly, it's a very interesting note with a target price of 534 rupees on Eureka, which is a 23% upside from the current levels. Now, one of the key things that Nomura is saying that, focus on premium launches will drive revenue growth going forward. And another thing is on margin tailwinds. They have said that, They are in place, and the EBITDA ex ESOPs was 6% higher compared to Nomura's estimate, which is coming at roughly 31% growth. Now margins at 11.2% have benefited from lower raw material to sales, as well as other expenses to sales have been curtailed, and going forward as well, the brokerage is estimating this to be at a maintainable level. Now PAT had a one-time impact of roughly 15 crores. Now this was due to a loss of fire, due to a fire at the warehouse. And the company has mentioned that this is under insurance claim, so going forward we will be awaiting some more key details on that. But in FY25, they will be focusing on scaling up the premium launches. Do know that the company has also increased the annual maintenance contract prices substantially in this particular quarter, and next year we'll see a benefit on revenue on those front as well. Finally, it has gained market share in water purifier in fourth quarter, and the brokerage is estimating that going forward it has a strong momentum in FY25 to increase their market share. And finally, they are expecting, low penetration of just roughly 10% of premium launches to be scaled up. Finally, brokerage has said that, the stock has corrected roughly 18% in the past 6 months, which has made valuations more attractive at 33 times. And that's why I'm much positive on Eureka Forbes with 23% upside from current levels. Back to you.
All right, Eureka Forbes in focus. A small uptick, maybe at least in the pre-open session on the back of that note. But it's going to take more. It's going to take more than brokerage notes this morning for individual stocks. It's perhaps going to take more than even results. And we've seen that with the Cummins. We've seen that with the Tata Steel. And let's just see where they've ended at the end of the pre-open session. The big numbers. Cummins at least now up in the green. And Tata Steel as well, we'll take a look where the numbers on the face of it look pretty bad, but as per brokerage notes, better than what at least they had penciled in, but the stock down this morning. Just a quick word from you, Shrikant, on let's get, now that you've seen the pre-open rate settle, your top two picks, would they stay the same with, with what you spoke at the start of the show, or anything that you would add?
See, apart from this two stocks that I have given, what I can see on the charts that most of these oil PSUs, they are also showing some resilient activity. And again, as I am expecting that this is the correction, and the market will again start resuming its uptrend after hitting the important levels like maybe 22,500. I am of the view that we should look for adding stocks like Gas Authority as well as ONGC to the positional portfolio. Currently, the ONGC is around 275, 274, but the stock is having minimum downside. But in case if there is an upward activity, then the stock can easily cross the levels of 300. So in the near term, we are expecting ONGC as well as GAIL to do well. GAIL is also very close to the important support line of 200, 205. Between these levels, the buying momentum is very high. Delivery-based volumes are also increasing on a day-to-day basis. So based on that, I'm expecting GAIL also to move towards 225, 230. So GAIL as well as ONGC should be on the watch list.
And very quickly, Tata Steel reported numbers. The three brokerages that I've seen have seemed to be impressed by those earnings. The stock is not getting whacked out of shape just yet, but on Tata Steel at 172, how does the stock look?
I think, the stock is very strong. And if there is any lower opening, then close to 172 or 170 levels, it's a buy. It is eventually heading for the levels of 183, 184. That's the overall view. And it is maybe correcting because of the rally that we saw from the levels of 160 to almost 178, 180. So, yeah, correction is, I think, will be an opportunity for traders to look for adding positions.
Right, that's Tata Steel. Look to add positions. 182 is where the stock could be headed. Looking okay in terms of the technical setup. Avinash, very quickly, we've got a minute to go. What did you make of Tata Steel's earnings?
I think numbers, have been slightly disappointing. But again, there have been some exceptional items. So I think, broadly numbers are in line. But I think hopefully the markets are expecting that from the coming quarter, once these exceptional items are out of the picture, then I think, the markets would obviously like to see stronger bottom line numbers. Overall, I think the numbers have been not very bad, but also not very good. So I think it's a neutral call. We continue to maintain a hold here.
Okay, so Well, that's the long and short of what's happening out here for markets. Shrikant, very quickly, less than 30 seconds, but if you had to trade HDFC Bank today, would you do that? Quick 30-second answer.
Yeah, I think after the expiry, most of the time we see some buying interest in HDFC Bank. It is in the range, but as it is down yesterday, I think somewhere close to this 1500 level, it's a buy with a target of again 1530, 1540. So okay. HDFC Bank is a buy.
HDFC Bank is a buy. Remember, Shrikant is in the buying mode. He's mentioned that if we touch about 22,500 odd, people should look to go out and buy into this market as well. We're not starting as badly, maybe, but let's wait and watch how it shapes up. About 1/3% on open or more than that. In fact, 1/4%. Not that bad at all. You have to admit that this is actually a very decent start for our markets. Let's see if it stays this way or no, but 0.18% is very good. Banks in the green. That's pretty interesting. Let's pull up the mid caps and the small caps and see how we are doing there. About 0.14% for the mid cap index, and the small caps about 0.19%. No big cuts relative to what we've seen rest of Asia. Did we do some bit of that yesterday itself is the key question. But let's get the heat map up on the screen and show you what's moving and what's not. Let's start off with, of course, the gainers. A few of them. Kotak Bank up there, Bharti Airtel up there, BPCL up there, a little bit of State Bank of India, ICICI Bank. So that explains why the Bank Nifty is active. It's not HDFC Bank, but the others, ICICI and SBI, which is helping. Adani Enterprises marginally in the green. So that's about the set of stocks which are in the green. Tamo and Hero Motocorp too. Tata Steel reacts negatively to its numbers. So EBITDA better than estimated, but a weak quarter showing in the stock. iShares a little bit lower, but it's effectively the overall drag which is pulling some of the stocks lower, except for Tata Steel, which is news based, and banks trying to hold out. Hindalco extending its gain, which is very good. Just one word on the VIX and see how we're starting off on the volatility index before we talk about stock specific moves at the broader end of the spectrum. India VIX kind of at this 24-25 level, so no big changes here. Remember, today is the monthly expiry. Let's see what happens tomorrow. Tamanna, broader end of the spectrum.
Absolutely. I think that pause sort of effect is seen as well, apart from a few specific stocks that are responding this morning. The sense that I'm at least getting is that, no one wants to take any big positions. Look at that, completely flat on the mid-cap 150. I mean, it's just no movement, so to speak. Even the small cap index, completely flat this morning. Individual stocks which are responding and on expected lines. I'll start with Edelweiss Finance, and that is, I would say, the one company that can respond to the regulatory impact of what the RBI has said. They've stopped the Edelweiss ARC companies from any new business. That cease and desist order obviously was expected to have a negative 9% down on the stock. IRB Infra, we talked about the promoter stake sale and how that would impact. That is now out of the way. It happened at a discount, 10% down on that stock, which is expected after the stake sale we've seen. SJVN is another interesting one, a stock which has been a favorite of the street, but results have not really matched up to expectations. About 4% down this morning on the back of numbers. So I would say that broadly the biggest sort of action you're seeing, or the biggest response you're seeing, is on numbers. Bata, Lemon Tree, the other two, which are reacting to numbers. Bata negatively, Lemon Tree positively. We said that, that's a space which is having a good time, and Lemon Tree was decent set of numbers. So you're seeing that, positive impact over there. Just Paytm I wanted to pull up because you're seeing a second day of a 5% upper circuit on Paytm, despite denials from the company and all the parties involved, but the rally definitely continues. Cummins India was keen to see what happens there because numbers seem decent on the face of it, but the street's not too excited about Cummins this morning. So I would say that a very careful set of trade, Samina, and I don't know what else you're spotting or anything too exciting over there, but at open, you're seeing completely flat market, at least Bank Nifty up in the green.
It's better than expected, and I think we should be taking heart from that. The handover from world markets was negative, but despite that, the bulls are giving it a good fight. The benchmark is not looking half as bad as implied Nifty was indicating to, and Bank Nifty is seeing some buying. So would probably attempt to close closer to 49,000, but this isn't a bad start. This is probably the best start we could have expected on a morning like this with so much uncertainty around us. Broader markets as well doing slightly better than the benchmark, and that could be some good news. This is despite a few big block deals that could have potentially impacted lots of stocks on the street. A quick check on implied Nifty as well and take a look at how that's doing. A big spike was seen on implied Nifty, and this morning, let's see if we moved above levels of 24, 25, but an expectation would be that implied Nifty may ease off a little bit, but till, of course, the 4th of June, some believe that you could be hitting levels of 26, 27, slightly higher or flat on India Wix. Top loser is Edelweiss and IRB Infra, but IRB Infra is on back of the big block deal. The counter is down 10%. KFIN as well is down about 5%. I guess the block deal there has also been concluded, on back of which the stock looks weak. RR Cable, let's pull that one up and see if the block has happened there too. Doesn't seem like it. 2.5% higher on RR Cable is what we have. SJVN, we talked about, those numbers were weak and the reaction is obvious on the stock. You've also got a whole bunch of smaller companies that have reported numbers. But a quick check on shipbuilders and see how they're doing after yesterday's sharp rally and the response to Mazagon Docks. Let's see if the continuation of the rally is visible. Those stocks seeing a flat move. Mazagon struggling to get into positive territory, but Garden Reach and Cochin Shipyard both trading with a slight negative bias. A quick take on the broader market earnings that we've got. So NOSIL reported numbers. If I can get NOSIL on the screen, be good to know how the stock is reacting. The stock is up 2%. GMR Airports, another one that reported earnings, and GR Infra Projects. Both those counters trading flat or rather unchanged. HOEC reported numbers that want great, to say the least. The stock is down 2% as we see it. Mishra Dhatu Nigam, profits declined, revenues were higher, but the street may be giving this a thumbs down. The stock is down 3%. MTNL, if you have got any surprises there, then it has reported a loss once again, but the stock not doing too much in trade this morning. MM Forgings, AGS Transact, Banco Products are some of the smaller companies. Heritage Foods, very, very good earnings from Heritage Foods. Should be a top gainer in today's trade, I'd imagine. 5% higher. So good quarter for Heritage Foods is the way we see it. Dredging Corp as the other one we want to track and trade this morning. That's what we have on the sell side. A quick few gainers that I can see in terms of the screen this morning. Emami is up 10%, so post its earnings, the stock continues to do well. ITI reported numbers yesterday. You're seeing a 6% up move this morning. CG Power, Bharat Dynamics, it was one day of weakness yesterday, and the stock is back up and running, 3% up move on Bharat Dynamics. While we're looking at that, let's also take a look at HAL. They both as well move in tandem with each other. HAL should be seeing a flat start. So this could be an opportunity for a long trade. If you're looking to get in, tracking what BDL does, HAL may continue to see some buying over the course of the day. Campus Activewear continues to do well. Motilal Oswal Financial, Concord Biotech, these are companies that have reported numbers this week that are seeing a little bit of an uptick in trade. But Shrikant, coming on this one, it's not a bad start at all. We were expecting a little more pain, keeping in mind the setup, the weakness. But 22,640, 650 is where the Nifty is currently at. 21, is where we're currently at. 22,683. We are very close to turning positive, actually.
Yeah, see, it was very close to its important support levels based on option statistics, based on averages, based on retracements. So we saw some recovery and pullback from these levels. Also, if we see the broader pattern, then it's a corrective pattern in that particular major setup of the market. So what is now important for us is to sustain above the levels of 22,700. That will generate extra strength in the market. So for the time being, till the markets are not breaking 22,600, we are going to see consolidation between the levels of 22,700 and 600. But above 22,700, we can see rally towards 22,800 or maybe 850. Bank Nifty is already doing well. It is well above its important levels. So there we can see some further more gains. And if Bank Nifty is going to do well, then I think Nifty will also eventually follow to the same. State Bank especially, as well as other few banks, they are participating in this move. But State Bank is now very close to its crucial hurdle of 835, 836. Above that, the stock can move towards 855. So this stock should be on the watch list.
All right. So SBI under the watch list, definitely one of the ones which have turned positive today. Maybe that S&P effect is working out. Not bad. SBI about 1% up. Just want to pull up the Nifty as well and see if we're moving in the positive. Let's look at the components of the bank Nifty as well. Nifty flat right now, but not too bad. 46 points down, not too bad from where we thought we'd start. The bank Nifty is up in the green, 240 points up. So bank Nifty having a good day. SBI obviously leading that charge. Kotak Mahindra Bank also not bad at all today, all things considered. ICICI EU Small Finance Bank. Avinash, the question about valuations, and this was something we were discussing in the morning setup as well. Once the mood changes in terms of valuations, private banks start looking interesting, isn't it?
Oh, exactly. I think you can obviously say that stocks like ICICI Bank, Axis Bank, I think look very interesting bets, and I think valuation catch up will happen post the budget, which is going to be announced by the new government. I would believe that banks are very well positioned, and within that, Axis Bank and ICICI Bank look to be very interesting. The numbers have also been very robust, and I think the management commentaries have also been very encouraging. So I think you're right in saying that somewhere private sector banks would obviously take a lead, and ICICI Bank seems to be the front runner here. So we would suggest accumulating ICICI Bank even at the current odd levels, and even an Axis where I think FY25 is going to be significantly strong.
Avinash, leave us with an idea. One stock that you are investing in currently.
So actually, Niraj, we are interestingly, looking at domestic, cement companies. Our sense is that cement is going to be a very strong kind of sector performer. I would suggest that Heidelberg Cement, where we believe that, it operates largely in the southern and the, central markets. That is one stock where I believe, for a very long time, the stock is consolidated. So here, possibly, we are looking at a target price of at least 240, 250 over the next 6 to 12 months. So I think you could see interesting numbers for FY25, and pricing power gains are going to come in. Some amount of volume expansion is also expected. So I think net, around 190 to 200 would be a good, range to accumulate the stock at the current levels.
All right. Thank you so much for that, Avinash and Shrikant over there. And it's looking like a morning that we need to track very, very closely. Not a great start, in fact, a negative start for all the key indices. Bank Nifty is turning out to be an outlier, and it's really all about the banks this morning. But we'll take a very short break. On the other side, we're keeping the focus on the corporate side of things. The management of Azad Engineering will be speaking with us, and also a reminder, at 9:45, we speak to Mazagon Docks. back. Now, before we get to the rest of our conversations today, an interesting article where Sunil Bharti Mittal, founder and chairman of Bharti Enterprises, talks about his meeting with Prime Minister Modi that took place in 2018, which he calls a turning point for Bharti Airtel. Now, this was a sort of a relay of a conversation that he had, and here's what he says, and I'm quoting, he told me that this government will not tilt towards either side. Whatever is good for the country will be done. You fight in the marketplace, I don't have a view on that. But from the side of the government, you can be sure that the government will not take sides, and that was enough for me. I got up and thanked him. This was the turning point for Airtel. Now, this is, the quote is very, very crucial, because if you look back to what was happening in 2018, where there was a huge telecom war, a disruption in terms of prices, rates and tariffs had dropped, and then the question, of course, was survival and will you come back to a duopoly. Another quote from that article which caught my eye, he says, sometimes you need an inspiration. I do that to my troops. I needed that from someone. There was a very strong special message from the PM, fight in the market. Here was a man telling me, who had himself fought against a lot of odds, that you do your work and be very assured that this government is going to only do things that are good for the nation. So, and interesting insight there from an article which quotes Sunil Bharti Mittal. I thought that was interesting, because especially telecom has been such a cutthroat space, and the disruption which took place in that year ended up changing everything.
Yes, indeed. And we are seeing some signs of that happening now fresh again, wherein Vodafone Idea has gotten a lease of life and more, courtesy the government participation. And we are not looking at a duopoly, but three-player market. And it'll be really interesting to see. I mean, the Vodafone's comments post the results were very encouraging as well about what could happen in the outlook ahead. So, yeah, pretty interesting, the turn of events in telecom. And I must say, I mean, Bharti Airtel, we might think that it's a slow mover, doesn't create wealth, but a 5-year chart of Bharti Airtel will show you it's actually been a very, very strong wealth creator of sorts for a company of its size. So, full marks to that. But anyways, let's move on and talk about, focus on defense for a bit. One of the companies is Azad Engineering, not strictly defense, but while they're doing a lot of things, the recent announcement post the results around they getting shortlisted or getting a contract under a DRDO agency has been interesting. Vishnu Malpani, whole-time director at Azad Engineering, Johnson right now with his with some thoughts on what's happening in the company recently and this particular verdict as well. Vishnu, good having you. Thanks for taking the time out and joining in. Before we talk about the developments, just a word on the year gone by, FY24, and have you given a formal guidance for what could happen in FY25? Because the last couple of times that we've spoken to Azad, there have been a lot of exciting developments with Rolls-Royce, with some of the others. Do some of them come to fruition in terms of numbers in FY25 over FY24?
Yeah, thanks, Niraj, for having me on the show. First of all, I'd like to just tell you about the year that gone by. So in FY24, we registered 35% growth in our top line. So we delivered a top line of 340 crores with an EBITDA of 117 crores, and with a PAT margin of about 17%, which is 58 crores. So growth in our top line was about 35%. If you look at the growth in our bottom line, which was PAT, our PAT is roughly 6.9 times of what we delivered last year. And because last year we told the market that the PAT that was delivered 8 crores optically was because of certain convertibles that were there, and it was one time, and so it should get normalized. So this year we've been able to do that. And in terms of our EBITDA margins, we've delivered a 34% EBITDA, and we've over delivered on the guidance that we had internally. And for the guidance for the current year, we are looking at a 25 to 30% growth in terms of our top line and bottom line. Now, these are some of the interesting developments that have happened on the financials of the company, but there has been a lot that went by last year for Azad in terms of what we've achieved in business. We've signed multiple contracts with our key customers. We onboarded with Rolls-Royce, signed a long-term contract with them for manufacturing critical rotating parts and for their defense platforms. And this was a big foot in the door for Azad because Rolls-Royce is a very big opportunity, in the engine manufacturing space. And for us to get in there, manufacturing critical components for them is a big thing. And this is just a starting point for us. Similarly, we signed 2 other contracts with our client Baker Hughes, which is again a long-term contract. So that is also a sector that we are looking at diversifying into, and we did that. We signed a $35 million contract with GE Vernova, which is also a very strategic contract, which is going to extend over the next 7 years. Recently, we won an order with our esteemed GTRE, where today our capabilities from a component manufacturing for Azad is now moved to assembling and manufacturing an end-to-end turbo gas generator engine end-to-end. And we won that order from GTRE DRDO. And over the next year, we should be developing that. We are their sole development cum production partners. And the first set of engines should be delivered in FY26. So this is, sort of taken our capabilities to a completely new orbit. And all of these developments that I've told you are purely based on the technical capabilities that we've built in and the commercial viability that we've been able to show to our customers.
So we would want to talk some numbers as well. Just wondering, you will maintain margins, I reckon, in FY25 or FY24, 34-35%, right?
So we've given a margin guidance also. Our guidance will be in the range of 30 to 36%.
Okay, fair call. I just want to pick up on one thing, and my colleagues would want some more questions as well. But this GTRE DRDO order, right? You mentioned that you are the sole production agency. Are there some numbers to this? You're delivering it in FY26, but are there some initial numbers, and can these numbers expand over time?
So, Niraj, I won't be able to comment on that because this is a strategic contract that we're signing. So, can't reveal more details, but I can tell you this will be used for defense applications, and it is, so India has been good at designing engines, right? Indigenizing engines since the 1980s, and I think our responsibility will be to get this, design of a reality into an output, which will deliver on the testing parameters that have been set by GTRE and DRDO. I can tell you that it's very exciting. Internally, right from our CEO to all of us are very excited in delivering the first set of engines. We believe this should be delivered in FY26, and you'll be able to see the developments then. I should be able to talk to you about it more, maybe in the couple of quarters. But as of now, I can tell you that this is going to be used for defense applications.
Vishnu, I'll just take a cue from that. While you can't quantify the order for us, give us a sense of payment cycles. Is it milestone based? I understand it's a long-term agreement and a strategic one that you have, and not just for this one, even for a Rolls and a Baker Hughes. When we spoke to you last time, I think there was some apprehension in discussing the size of the order. Can you share with us a little bit more on that today, and also tell us how payments are going to be made, and when will this reflect on your top line?
So there are contracts where I can talk about the numbers, and some of the contracts I'm restricted to share information. So, for example, Rolls-Royce contract is again a strategic one where we're working with the defense platforms. We're working on 2 engine programs there. I can only tell you that Rolls-Royce has a lot of engines in their portfolio, and we are starting with 2 engines and manufacturing critical components. So you can imagine the size of the opportunity right there. I won't be able to talk more about it, but I can tell you the revenues will start reflected in FY26. So FY25 is when we do the development of this, and FY26 is when this gets reflected in our revenues.
Vishnu, how significant are these recent order wins on your top line? So while you can't quantify it for me, can you share a percentage with me?
Okay. I'll try and give you some sense to it. So last year, if you look at our cumulative contracts or order books put together, so last year we were looking at roughly around 2,000 plus crores was the estimated value of our contracts in the last year alone. Today we are sitting on estimated contract size of about 3,200 plus crores. So that is roughly addition of roughly 1,200 plus crores in put together in amongst all the opportunities that we spoke about. So that's the pretty much. That's the quantification that I can tell you. So our order book has moved from roughly 2,000 crores to about 3,000 plus crores if you look at the estimated size of contracts in the last 1 year.
Right. Vishnu, Tamanna here, and fantastic growth over the last financial year. You've talked about how many milestones, and it's been a big year as well. I'm trying to understand if that's a pace that you can keep up through this next financial year. Do you have an order book outlook of new orders coming in? How many of those are yet to be executed? Can you give us a sense over there? And is this focus more indigenous or also export? Because I know export is a big part of your revenues.
Yeah. So Tamanna, first of all, I'd like to answer your first question, which was, can we sustain this kind of growth? I think we can definitely sustain. We are addressing a pretty large market. Our target addressable market is roughly $28 billion. And what we are doing in terms of our revenue is barely scratching the surface. We are at less than 1% of the market. So we can sustain this level of growth for a really long period of time. In fact, in the near term, we are looking at 25 to 30%. When we have the new capacity that comes in, our growth rate also will be higher than what we are projecting right now. So that is one. Second, in terms of
just on that, when is this capacity coming in? When you talked about the new capacity coming in, what's the timeline for that?
We are adding 10 times more capacity to what we have today, and this capacity would come in FY26. So FY26, we will be doing incremental revenue will come out of the new facility for us.
How will you fund it, Vishal?
I'm sorry?
How will you fund these very aggressive expansion plans that you've mentioned?
No, so we raised, in our IPO, we raised about 240 crores. And our plan was to deploy about 80 to 100 crores in developing the infrastructure, which is 10 times the capacity. And the balance, about 200 crores, was to be deployed in plant and machinery for us to reach, our FY27 guidance.
So new capacity coming in, that's exciting. Let's come to the second part of the question, which is, whether you're shifting your focus and will exports continue to be a lion's share of revenues, which is, I think, about 87% now?
Yeah. So export has always been the focus because, today in every sector that we work with, we're working with the sector leaders. So, whether it's energy, aerospace, defense, or oil and gas. So we work with the top customers that have about 70 to 80% of the market share. So export will definitely remain our focus. Our export business should always be over 85% plus in terms of our contribution. But in terms of the, strategic contracts that we're looking at, we are, adding value to a lot of these indigenous nation pride contracts that like the one that we received from GTRE. Because, what is important to understand is we have shifted, we've moved into a completely new capability area where we were manufacturing components and now we will be manufacturing a complete engine. And how many companies would you know in India that have the ability or the capability to manufacture a complete engine, assemble it and deliver it? So that is where, Azad is right now in terms of capability, and a lot of exciting contracts with our customers are being discussed right now. So although we did add about 1,200 crores, there is a lot of other important discussions that are happening, which we will update you all whenever the time is right.
So Vishnu, last question, two-part question. So from 3,000 crores, what do you expect to end the year with in terms of order booking? Part one of the question is that. Part two, what's the FY27 guidance? Sorry, I missed that. You've closed 2024 or FY24 at 341 crores. What's the FY27 guidance?
So FY27. So FY27 is too far.
I heard you say that you want to meet your FY27 guidance. So I'm asking you.
No. So so the point is we are going to grow at about 25 to 30% until the new capacity comes in. And once the new capacity comes in FY26, which will be an inflection point for our growth, then the rate of growth will grow upwards of 25 to 30% from there. That's something that I can tell you right now. And in terms of the
order book,
in terms of the order book that you asked me, we should be adding another 1,000 to 1,200 crores approximately from the new contracts that we're looking at this year.
Okay. Well, we wish you all the best for that and more. Thanks so much for joining in today and giving us your perspective, Vishnu. All the best for the year ahead.
Thank you so much for having me. Thanks.
Well, at 60 crores of PAT and circa 8,000 crores of market cap, this is not a cheap stock by any stretch of imagination, but plans are promising.
No, but if you are going to increase capacity massively, if your order books can go up massively, and defense is just this very exciting area, you don't have too many options to play there, then you might see more of a bump up. But the defense theme sort of continues this morning on India Market Open, because we'll take a very short break. On the other side, we are speaking with Mazagon Docks. The numbers have thrilled the streets, is all I can say. And Sanjeev Singhal will be joining us, the CMD, to talk to us about the financials and what next in store. Stay tuned.
Welcome back. You're watching India Market Open. The markets are holding steady, and I think that's what we'll be taking a little bit of relief from after, of course, a week handover and 3 days of weakness on the street. But we have with us one company which has created an enormous amount of investor wealth, has completed 250 years in business very recently, and has reported a fantastic set of earnings yesterday afternoon. Sanjeev Singhal, Chairman and Managing Director at Mazagon Dock Shipbuilders, now joins in. Morning, Mr. Singhal, thank you very much. And I believe you did complete 250 years in business very recently. So congratulations, and you are a precious gem, like the defense minister has called you. And of course, enormous amount of investor wealth has been generated. Traders, investors, institutions are enormously pleased with the kind of wealth. You posted a fantastic set of earnings yesterday evening. Give us a sense of going ahead and looking ahead, what went into FY25 and what is the roadmap for the next couple of years? What is the annual compounded growth for the next few years for of course, Mazagon Docks?
Good morning to everybody. First of all, I would not be assigning any numbers right now. As far as FY25 is concerned, it's a bit too early. But yes, what I can say is that Mazagon Dock Shipbuilders Limited created history as far as the revenues are concerned, profit is concerned. In FY22, it was the best since inception. FY23 was again the best ever since inception, and 24 again it is the best since inception. And we believe that this momentum is likely to continue. As far as the numbers are concerned, I would not be assigning any numbers right now. Maybe when we are a bit deep into the year, then a crystallization of numbers would be feasible. As far as the future orders are concerned, we have an order book of around 38,000 crores and approximately 36 ships to be delivered over a period of next 3.5 years. Apart from this, we are definitely eyeing for large big ticket orders, including the additional Scorpene submarines, 3 in numbers, for which the discussions are already at an advanced stage. And 6 number submarines P75 under Project 75I with AIP fitted, for which the field evaluation trials relating to MDL have been successfully completed. So this process is also on. There are also discussions with respect to next generation destroyers as well as follow-on ships, frigates of 17 Bravo project. So I definitely look forward to large ticket orders coming very much in future. This should keep the momentum up, and we are also trying to grab orders from other areas, including the coast guards as well as the export markets.
There's so much to talk to you about, Mr. Singhal, but let's take this one at a time. Your margins have improved substantially. We're close to 17 from 10% that was seen in the same quarter last year. The pace of margin expansion is fantastic. Do you feel like, while you can't give me a sense of the kind of compound annual growth you're working with, do you think you can maintain guidance at 17% for FY25, 26? And of course, is there any chance or potential for upside on that too?
As far as margins are concerned, these also have a component with respect to refund of liquidity damages, which were earlier levied on the boats of Project 75, that is the submarines. So we have received, during this financial year, we have received 2 refunds. Actually, one more refund is still pending and one more is still in discussions. So these have also contributed quite handsomely to the margins. Apart from that, there has been a significant increase in the interest rates and approximately 400 crores for the financial year 24 we have earned on account of the interest rate component itself. So these factors would continue to remain slightly beyond management control. And as far as the revenue from operations is concerned and the margins are concerned, yes, we would definitely like to work upon the margins and efficiencies, but it will always depend what kind of a competition is there and how the orders have been obtained, whether on nomination basis or on competitive basis. So market dynamics do keep fluctuating. They have a bearing on us, but we also try to improve efficiency.
You're right. Sir, just to understand, excluding the refund of liquidity damage and interest rate, if we keep both those components out because that's not core operational business, what do your margins stand at outside those 2 windfalls in that sense?
I've not worked on the numbers as far as the percentage is concerned, but I've given you the sense that we received a refund, LD refund of approximately 160 crores in the 4th quarter. And for the financial year overall, the interest component has also been pretty handsome. We can give the finer details. Right now, these numbers are not available with me.
Mr. Singhal, good morning. Tamanna here. Just wanted to know whether you see margins at these 17% levels going forward, and what would contribute to them?
I have been maintaining earlier also, and I have informed earlier also that whenever we are able to deliver a large platforms before time, it has a very positive impact on the margins of the company. So last year also we delivered the 3rd destroyer of Project 15 Bravo, which was almost 5 months ahead of schedule. So completing a project of this size 5 months ahead of schedule has a very significant impact on the margin on the plus side. So we would like to maintain this kind of a momentum. We plan to deliver the last destroyer of Project 15 Bravo again this year, and this also significantly ahead of schedule, which should have a significant positive impact as far as FY25 is concerned. Then coming to 17 Alpha frigates, we have 4 in numbers, and we plan to start the delivery, starting the delivery from the first frigate this year. Being the first of the class, in case we are able to deliver within the contractual time schedule, that itself would be a big achievement. So I would not say that we will be able to deliver for the delivery schedule, but in case we are able to maintain the delivery schedule, this gives a lot of confidence. And going ahead, we would definitely work on the balance ships of 17 Alpha. That we deliver them prior to the schedule.
All right. Yeah.
Mr. Singhal, good morning, Niraj here. Your order booking, I mean, couple of things on the order books. I heard in your first answer that you said that aside of the orders that have already been won, you're trying to bag orders from other areas like Coast Guard and export markets as well. What is the nature of these order wins? Are these likely to be very significant, or will this take time to become significant?
No, as far as the individual order size is concerned, they would not be comparable to the naval orders because naval platforms are significantly larger. But yes, in terms of volume and accumulative value, may be reasonably substantial. So last year we have bagged total 24 ships for approximately 7,000 crores. So whereas one naval platform itself would be more than this value. So in terms of number of platforms and value, these are not comparable. But yes, this is a significant chunk and an important area of focus for us. So moving ahead, we would be focusing on this area as well, along with the naval orders.
Other question, Mr. Singhal, a more macro question, if you will. But we hear a lot of people talk about how India could become a hub for global companies or global countries to get orders from over a period of time. Not just from a next 1 year perspective, Mr. Singhal, but if you look out till the rest of the decade, do you reckon that the size of the export orders for even a Mazagon Dock, or albeit for other players or this industry, could be a significant part of the overall execution that your company does? Let's say in 2030, if you will.
Yeah, I firmly believe that going ahead, export is going to become a very significant component of the overall pie of the revenues, including Mazagon Dock shipbuilders. And there is a lot of government impetus on this, and a lot of work has been done. But considering that these are long gestation orders, take time to materialize, so whatever job has been done, in future years, these results would be very much visible. We are also focused on exports. We have entered into a pact with the US Navy also, master ship repair agreement, which is being evaluated, and we are looking for a platform from US Navy. We are also engaged with the UK Navy. We are also engaged with Malaysia, with Indonesia, with Brazil. So some of these areas would definitely be fructifying in future years.
Mr. Singhal, in fact, when the first US Navy news came, that was very exciting for investors as well. To the extent with which you can share details, how large are these orders, US and UK Navy, and the fact that there is now, an order that you're doing for the US Navy, does that enhance visibility on a larger order book?
Till date, we have not received any order, although we have been qualified and we have entered into an agreement with the US Navy. But orders, we are yet to see the orders coming. So difficult to assign any numbers, but yes, it definitely provides a very good visibility. And we are evaluating their requirements, taking into consideration the infrastructure availability which we have. Of course, we are also going significantly for infrastructure expansion. Recently, we have acquired 15 acres of land, which is adjacent to Mazagon Dock Shipbuilders Limited existing premises. And we are also expanding our Nhava Sheva facilities. So over next 2-3 years, there should be a significant expansion in our capacities as well, which will also boost the export potential and taking the larger vessels, which are with these navies.
Requirements more stringent for any sort of work you do for the US Navy?
So quality-wise, Mazagon Dock Shipbuilders delivers the best quality. So these have been evaluated and accepted by the US Navy. So we don't see any issues. But yes, as far as the platform size are concerned, certain infrastructure limitations would be there, which are being addressed.
Just one last point. I think one big milestone in the time to come will be India's move for its first indigenous submarine. What is the extent of involvement for you, and what can you share about that? Because that would really be a big deal.
You must have, this was a news item. Mazagon Dock Shipbuilders has been working on a indigenous submarine of its own. So we have as an experimental and R&D project. Recently, we have launched a 10-meter long submarine, which is being totally built in-house. So we now will be installing the equipment, etc. And maybe over the next couple of months or a year down the line, we expect if this is a success, then definitely it opens the gates for a full-fledged submarine, totally made in India.
So that's back to business, and I want to understand from you. A couple of weeks ago, you announced land acquisition from Mumbai Ports Authority. How much capacity is this going to add to Mazagon Docks, and is this going to be to fulfill existing orders, or are we going to be sitting on sitting on excess supply, which will help you bag new orders?
As far as my current capacities are concerned, we are capable of manufacturing 11 submarines concurrently and 10 warships concurrently. So we don't have the order book right now, which is commensurate to the existing capacities. So whatever infrastructure is being created, it is being created with an eye on future orders, considering that the future platforms would be even larger than the current platforms, as well as the platforms from other navies, which are larger than the platforms which are being built in India. So this would be making us future-proof, and we expect to bag much orders for much larger vessels in future.
You've also, I believe, received a fairly significant order from a European client very recently for about 6 vessels. What is the timeline, the milestone payment, and the quantum of this order that you've bagged? And I'm assuming your current capacity is enough to build these vessels, right?
Yes, our current capacity is enough to build these vessels. We have bagged 6 with an option clause of another 4. And 3 vessels order we had received in the December last year, and another 3 vessels this year, April. 3 vessels are approximately 42 million euro. So 42 million plus 42 million, approximately 84 million euros order value is there. And this we intend to complete over next 36 months from the date of the order signing. So from December 23, 36 months, and April 24, 36 months.
Right, just 2 very quick focus areas for you. And you mentioned this the last time I heard you talk, where you said maintenance and repairs. That is one thing that the company has not put too much emphasis on just yet, but with the uptick in infra, that is a space you'd like to focus on in FY25 or the next couple of years. Could this become a significant revenue contributor, A? And the second vertical is destroyers. What sort of revenue contribution can we expect from destroyers in the next 2 to 3 years? So repair and maintenance on one hand, because I know that is better margins, and destroys on the other hand.
Repair and maintenance does have a better margin, but essentially we are a shipyard for the new build. So our focus area would remain new build. Repair and maintenance jobs would continue, but not constitute a significant percentage in the overall revenue. As far as the destroyers are concerned, I mentioned that we have a project 15 Bravo for 4 destroyers. 3 we have already delivered, and the last destroyer we intend to deliver this year, within this calendar year. So with this, the destroyer orders would be coming to a close, but we are targeting the next generation destroyers, which is under discussion, and which we expect would be significantly larger than the current destroyers, more potent, more weapon intensive. So this order should be significantly larger than the current order.
Comes through as soon as possible, the next gen destroyer. So that's the orders that I believe Mazagon Docks is probably bidding for and working on at this stage. But I think the growth here is for everyone to see. It's been a brilliant quarter for them. Mr. Singhal, thank you. It was indeed a pleasure talking to you, and good luck and congratulations. And we'll hopefully try and see you again for a more detailed conversation.
Thank you.
With that, the markets are holding up, which is okay for the street. The Nifty trades flat, but we'll slip into a break. Right after this is Talking Point, where we will, of course, be talking to CLSA to understand their view on the markets, election, and everything else in between.
Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The case for a chat today, and it's customized to fit our guest. Is the poll surprise priced in, and are all eyes already beyond that or not quite? I would love to hear what Vikash's clients are asking him and what is it that he's telling them. Can PSUs gain another leg, and have they increased the coverage on PSUs? Considering that an MNC broker, the coverage might be limited, but has that increased? That's the key question again. And will regulatory action spoil the party for BFSI, or will BFSI, looking at the valuations, be a key performer over the course of the next 12 months? Let's pose all of these questions to Vikash Kumar Jain. He's a strategist at CLSA, joins us right now on the show. Vikash, it's been a while, but thanks for taking the time out. Hope all is well.
Thanks for having me. Everything's fine. Thanks, Niraj.
Well, it's lovely having you, Vikash. And you would have guessed that I'll start off with the obvious question. What is the chatter from your large clients around the election? What is it that you are telling them to do pre or post, considering election and valuations and more?
Sure. So, I think an event like that, and with the positioning that it has seen, there is obviously some bit of risk management that is required. I mean, none of us, some of those clients sitting in the UK could not have predicted Brexit. Similarly, such events, when it comes to trying to predict, a consensus amongst a wide crowd, with all its ways in which parliamentary democracies work, it's not, there's always that small inkling of doubt which is there. So there's obviously a little bit of kind of risk management which might be seen, something which is being seen going into that event in the last few days. Beyond that, I think the crowd in general is pretty convinced of a continuation of a third term. So it's only a little bit at the margin. Otherwise, I think everybody is invested and into seeing that continuation. So that's clearly a base case that the ruling party comes back with a reasonably strong majority. That's what the base case is. If there is any deviation from that, is what will lead to a much bigger move in the markets either side.
Because I'm just trying to understand how you think about it. Different people have different opinions on this, but to run a government, you need 272, and not just individually, but even as coalition. My question is, from the last year's tally, I'm just trying to think about it tactically from a market perspective. If it's not a 300 number, but 10% plus or 10% minus, as the case may be, will that be a market moving number, or will it be a very short-term impact?
So let's try and understand what that number really means. Because I think beyond a point, it is about getting a bigger majority in the Rajya Sabha, and which will basically be, an event which gives you confidence that happens. Number two, an event that gives you confidence that there will be more states which will kind of come under the fray of the ruling party, and that basically means better coordination and better overall growth. Like, there are certain subjects which are clearly state subjects. There's only so much that the center can do about it. So market looks at everything eventually filtering down on whether this improves the outlook on growth or it deteriorates it. Now, if 303 was the number from last time, the rally that we've seen, which started in early December post the positive state elections, was slowly the build-up was that things are looking that government is likely to be as strong or stronger than that. That's why that number around 300 is relevant. Now, if the number is lesser than that, then the confidence on, that thing about Rajya Sabha and getting more states goes down at the margin, So that is how it could flow into maybe at the margin confidence on growth is a little lesser than where we've been. So obviously the most important number is 270, or I would say more like, so that clearly is the important number. But nonetheless, if it's going to be my guesses, now a lot of this has to be factored in, things are changing by the day. It's good that the market is going a little light into that event with the kind of move that we have seen in the market in the last 2-3 days. But clearly, 300, I would say, is at the margin. Lower than below 300 will be at the margin disappointment. The two numbers that we are working with rounded off is 300 and 270. I would say a number less than 300, is going to be at the margin disappointment. But if it is above 270, then it should still be digested. So that's how I would look at it.
Got it. Lest I'm sounding like making it entirely a political discussion, I'm not. But I have one more question on this, and which is this very interesting note that you guys came out with, which had some reference to Modi stocks as well. I'd love to understand if there is policy continuity, Vikash. How do you look at the next 5 years from a winner's perspective? I'll come to the earnings aspect later on in the conversation, but just purely from a policy, political continuity perspective, would there be winners that stand out?
Yeah, I think so. Good that you define the time frame. See, my opinion on stocks will be different depending on the time frame. What we need to very clearly appreciate is the fact that did you lose me for a minute? Or?
Yeah, but I can hear you loud and clear, Vikash, so no problem.
Sure. So, okay. So, what we need to understand is the fact that markets the note that I wrote about Modi stocks, essentially, that's just a catchy terminology to make things simple. But basically, there are these 54 or so stocks, 27 of half of them being PSUs, the other half being non-PSU stocks linked to certain sectors, certain kind of characteristics, which are generally associated more closely to policies of the government. Now, the median return on these stocks is 50% in the last 6 months. 50%. 6 months again, because this has been the period of election rally. When the market has gone up by 15%, Nifty has gone up by 1.5, these stocks have gone up by 5.0. Median. There are stocks which have doubled. Now, that just tells you that there is a lot of excitement that has got baked into these stocks. Some of these stocks were cheaper, like some PSU stocks were cheaper. So they have kind of gone up, caught up to that, value trade, and they've gone beyond that. So from a perspective of more near term, if you were to ask me 6, 9, 12 months, of course, these stocks will have to, irrespective of the outcome of the elections, these stocks will have to, hold back, catch up on breath. So that goes that's how stock markets work. Nothing goes up, linearly every day. It is, they will have their fits and starts. And that's something which one should bear in mind. A lot of times when they have built in a lot of these positives at the start, there will be a catch up. Now, when I look at the last two times, the elections in 2014 and 2019, then there was this similar kind of a trade, and the PSU basket can be seen as the PSU index can be seen an easy proxy to capture this kind of election trade. Within a couple of weeks or within a few days after election results, in both of those instances, PSU stocks kind of as an index had an interim peak. Early June, I think broadly was the date because election results came out mid-May, both of those times. So, from that perspective, I think what also starts happening is post-election results, then you start seeing the ministers, and then the discussion moves to the budget, which typically is about 6 weeks, 5 to 7 weeks after the election results. So essentially, then there is a bit of reality check, which kind of happens. So from that perspective, there is going to be many of those events which will make people think that have these stocks moved, at least for the time being, a bit ahead of themselves. And that's why what we predict is a playbook similar to the last two times, and sometime in this month, a kind of an interim top for these Modi stocks, as a basket. Then you start separating out. Like right now, they've clearly, it's remarkable. 27 PSU stocks in the F&O basket, all of them have outperformed Nifty. All. These come from various sectors. So there's clearly a basket trade happening irrespective of the sector dynamics, which have kind of really played out.
Well, that's a very interesting way to put it as well, Vikash. So thanks for that thought. Stay on. We'll be back. We've spoken a lot about politics. We'll try and talk about the global factors which will impact the markets. So remember, viewers, from a markets perspective, global markets perspective, the bigger election is happening in November, though for us it is right now. We'll also try and talk about a bit about earnings and some other factors. Stay tuned. Back with Talking Point in conversation with Vikash Kumar Jain, strategist at CLSA. Vikash, interesting thoughts on the burning question. Now to some other pieces as well. The fact that we may be in a higher for longer interest rate regime globally, at least US, if not Europe, and that's the mother market per se, how big of an impact could that have on risk asset valuations, including emerging markets like India?
Sure. So, a very relevant question. Firstly, let's try and understand on how the market moves during the remaining part of maybe the next 6 months or so, because 6 months out, we have faced the US elections. Now, what has been happening with the Fed is slowly, this is a very remarkable thing that we've seen in the last 2 months, last 1 month particularly. There's no big cool off in dollar. There is no, rate cuts which have happened. But despite that, suddenly, currency proxies like gold, silver have kind of gone, taken to the races. That's something which is telling you one very interesting thing, that in this election period or pre-election period, the market is uncertain if the Fed will do the right thing which is required based on the fundamentals of inflation and every other thing. Because, there is a debate that whether the Fed will be pressured to still cut rates despite the fact that inflation is not fully under control because of it being, maybe politically inclined. Or at the same point of time, Trump generally been proponent of lower rates. What happens if he kind of comes in? So bear in mind, for now, for this calendar year, I think there are certain commentators who kind of also bring out that if there is no rate cut in June and July, the next meeting, then it'll be far too closer to elections to make it look like a non-political rate cut. So, there are all kinds of arguments which typically goes with elections, as you can imagine what's been happening closer home as well with our elections. So that is what makes the outlook on yields. That is why this traditional trade of commodities, dollar and yields have not really coincided like they would typically. So that's something that we should bear in mind. Nonetheless, from our perspective of Indian stock markets, higher for longer. More than that, 6 rate cuts is what we started the year with in terms of US Fed. That's down to practically 1.25 rate cuts in this calendar year now. I think I was checking today, they were talking about 30 bips rate cut in this calendar. That's like 1.25 or less than that. Now, if that is the case, then clearly what I expected should have happened has happened in the US market, but not in our market, which is banks in the US have outperformed. Like Dow Jones Banks Index is 10 percentage point outperformer over Dow Jones as compared to our market, where private banks have underperformed Nifty by 7-8 percentage points. So in a way, because we've been so focused, like I was explaining before the break, that there's these stocks. If you had those stocks, which are election stocks, Modi stocks, you would have outperformed. So we've been very focused on that trade. I think what will start happening once this election news is behind us is you start getting more closely linked to, the global macros and whatever's happening. Because even we don't see any big talk of rate cut immediately by RBI if the US Fed doesn't cut. So essentially, that should ideally be at the margin positive for banks. But our banks, private banks, which are now at one of the very few sectors which is very attractively priced, if you genuinely believe in the longer term growth story of India, I think that's where they should get a little bit of legs once this election news is behind us. We kind of get into more fundamental way of trading stocks.
Now, just one final question, Vikash. Does that have to do with foreign money also coming back? Because the supply has been the big reason why these guys haven't been able to build up at all. So does the foreign money come back? And part 2 of my question related to that, your conversations with your key clients globally, I mean, FIs have kind of shunned India, if you will, maybe in line with some other emerging markets as well. Does India make a comeback along with the EM basket, or would there be idiosyncratic flows that could come to India post-election?
So I think you're absolutely right on the color of money, because typically the crowd that has generally moved private banks up has been the foreign money. And with them turning sellers after the big inflow in December, it's kind of not helped these stocks. What will they do? If you think about it, the call for them was a little obvious. When China started working for the last 2-3 months, and many of them had gone underweight, and there was this big event in India which they did not maybe want to take a clear chance on, which was elections. So over the last 2 months, them selling and moving into other markets was a little bit easier. Now, what happens after, if election outcome gives them stability and more predictability for 5 years? At least at the margin, one factor will be better. But finally, it also depends on how much legs the Chinese market has. Like we saw in December, say from starting November, December 22 to still March 23, when China went up, India was actually underperforming, because a lot of them have moved out of China, and now when they have to chase performance to an extent. So I think the other bit is out of our hand, but with the election thing, if it gets settled in a positive, stable way, at least that factor should be at the margin positive to invite foreign money back.
Got it. Because can I squeeze in just one more question very quickly? Are you constructive from now on until the end of the year if, as we said, this event passes by with no major disruptions?
Well, I think this is something which we've had an opinion on right from the start of the year. This is likely to be a low return year at best, because the starting point is very inflated valuations. The last 6 months, because of this election event, we've kind of shunned that valuation. But suddenly when things kind of come back and you take a fresh look at things, it is unlikely to be a big runaway rally unless there is a global runaway that we are part of from an India perspective. So I would say that given the strong performance that we've had over the last 6 months, there could be a bit more, a longer period of consolidation is what my guess is.
A longer period of consolidation. Fair call, Vikas. So good chatting with you. We should do this more often, really. And I know I say this every time, but we should, depending on how time permits you. But thanks so much for taking the time out and being with us today.
Thank you.
All right. That's the view from CLSA. Vikash Kumar Jain, strategist at the broking house, talking about how the possibility of it being a low return year and a lot of factors which might play into that. That's all on this edition of Talking Point. Thanks so much for watching.
Hello and welcome. This is the F&O show. I am Agam Vakil, and in this show we take you through all that is happening in the futures and options space in Indian equity markets. A quick look at how things are faring on what could potentially look like a very, very choppy day. We've already seen the markets come off by quite a bit in the day today. 0.5% declines for the Nifty, and along with that, well, the Bank Nifty, well, it's actually playing a little bit of a balance of a game because the Bank Nifty is up around 0.5% at there. So had it not been for the Bank Nifty, we would have seen more cuts on the benchmark. But let's talk about the constituents of the Nifty and see where there is that big pull and push. I reckon in the green, you will have a handful of banks. No surprises there. So HDFC Bank, ICICI Bank, Kotak Bank, SBI, all of them, at least in the terms of the top contributors, are from the banking space. And what's weighing down on the indices is Reliance Industries, Infosys, and Tata Steel, of course. It's announced its earnings coming through. Let's take a look at the future space then and see how things are faring there. Now, when it comes to the Nifty futures, of course, let's pull out the rollover data. That's the plate I want to keep an eye on, because rollovers at the moment are around 56%. We're going to have to wait and watch as to what level does this go to. That will perhaps give us a better idea of whether or not participants are in fact taking a substantial amount of positions in June, especially given the outcome of the general elections earlier on the next week. And maybe after that we start seeing a lot more traction with respect to June futures. Well, moving on, as far as the Bank Nifty is concerned, we're already trading in June futures. It's a new expiry, the first day there, and about 4% added there. No prizes or rather no surprises there. And even as the index advances by around 0.4%. So a handful of, contrary moves coming in as far as the key indices are concerned. Let's talk about the options market. I reckon that this is where things are getting a little bit more interesting. Now, today is a weekly options expiry, but even as the Nifty comes off, we continue to see more and more writing around the 22,800 and 22,900 calls. We don't have as much writing on the put side. Perhaps on expected lines, we're in about a little over an hour down in trade today. What would perhaps really surprise markets would be a sharp up move. From what I can tell is that we are already looking at a considerable amount of writing on an intraday basis when it comes to your strikes involving 22,800 and 22,900. And should we see the Nifty move ups even a bit, maybe even conquer 22,700, we'll just see a tad bit of short covering, and that could perhaps further propel the index higher. But to what extent is the big question, and whether or not that short covering comes as well is also the other big one. But it's your expiry, so you can't really rule out that choppiness. And perhaps we'll be in conversation with a handful of experts who will give us a better idea moving in to trade as well. So this is as far as your trade for now is concerned. Let's get in an expert then. In that case, we have Nilesh Jain, Head of AVP Technicals and Derivatives at Centrum, who's joining us on the show. Nilesh, good morning. Thank you so much for joining in. Perhaps an important day today, and a lot of nervousness as well. The Nifty is, of course, coming off by around 0.5%. How are you reading cues on the benchmark?
Morning, Adam. So today is a big day since we have a monthly FN expiry for the Nifty index. And from past 4 consecutive sessions, the Nifty has remained under pressure. And looking at the volatility index in the weeks, which is at the elevated level, so that is certainly a cause of concern, and that basically indicates we are likely to witness some amount of selling pressure going forward. So on the upside, the immediate hurdle for the Nifty is now placed at 22,800, and today's data of the expiry that shows that 22,500 should provide some amount of support. Even if we look at on technical front, the immediate support of 21 DMA, that is also placed at 22,490. So cluster of support is placed in the zone of 22,480 to 22,500. And we might see Nifty defending those levels from the expiry point of view. And the range from expiry standpoint looks like 22,500 to 22,650. So that could be 150 point expiry range. We expect market to remain under pressure for the day ahead of the major election outcome, which is scheduled on 4th of June. So we expect volatility to increase further in the zone of 26 to 28. And that is certainly may have some amount of pressure in the index as far as Nifty and Bank Nifty is concerned.
So, Nilesh, the complications of expiry will not be applied to the Bank Nifty, and in fact, we are looking at a contrarian move here. What's the way forward? What's your reading on the Bank Nifty?
So, Adam, yesterday we saw a Bank Nifty expiry, and rollover data were at 3 years low. That was at 68%. So certainly a very light position has been rolled over so far. And looking at the today's short covering in the Bank Nifty, we expect a sort of a pullback in the Bank Nifty towards 49,000 to 49,200. And then the range for the Bank Nifty looks like 48,200 to 49,000 for the day. And looking at the underperformance that we have seen so far in the Bank Nifty compared to the Nifty index, in the May series, there could be possibility of some amount of short covering in the Bank Nifty, and we might see a pullback, or I would say a strong pullback towards 49,500 to 50,000 going forward.
All right, let's talk about stocks then. Let's see where there is traction on an intraday basis in terms of change in OI, and perhaps we can decipher whether or not there is, some. Actually, we're looking at a lot of weakness across the board at the moment. Piramal Enterprises, Tata Steel. Tata Steel is near its day's low right now. It's down 3.1%. Well, we have weakness in Cummins India. Cummins, of course, came up with a very strong set of numbers. The conference call is going on right now. And Biocon as well as Alchem Laboratories are all seeing a lot of weakness coming through. What about stocks which are seeing unwinding? Of course, early days on June expiry, so not much to speak for there. But Coromandel perhaps is looking at a bout of short covering, unwinding coming through for GMR Airports and ABFRL. Nilesh, stocks on your radar at the moment?
Yeah, Agam. So I have two buy recommendation. First of all, Bata India. So we have seen a lot of underperformance, and the formation of a lower top and low bottom was also seen since past few months now. Now today we have witnessed a good breakout from an inverse HNS pattern, and good position has been unwinding can be seen. So a lot of short covering is happening here. So good price and volume breakout in Bata India. We expect a strong pullback here, and towards 1450 to 1500 sort of level can be seen on the upside. So immediate target would be at 1450 followed by 1500. Stop loss can be placed below 1375. So another stock that is looking positive is Bharat Forge. So this particular counter is in an uptrend and constantly forming a high top and high bottom formation. So in spite of the weakness in last two trading sessions, in fact these counters have outperformed. So we expect a further momentum here. And the immediate target could be at 1601 followed by 1630. Stop loss can be placed below 1545.
All right. So those are two of your calls, and of course, Bata India is where Nilesh is looking to be positive, and of course, the other one is Bharat Forge. We're looking at some amount of movement there as well. Very quickly, before we conclude this segment, perhaps we can take one stock up with Nilesh, and among the ones which are buzzing in the futures and options space. All right. Well, let me just pull up the handful of names which are in fact looking at some amount of weakness there. And in terms of weakness, we do have something like a Voltas, which is down 1.5%, Tata Consumer Products, which is down 1.5% as well. Piramal Enterprises also looking at further weakness. There you have it. Let's talk about Piramal Enterprises. Nilesh, very quick view on this one. How are you seeing trade on Piramal Enterprises? Anything that stands out? Would you go short even at these levels?
So Agam, we have seen a lot of consolidation with slightly negative bias in this particular counter. And earlier, the major resistance that it has faced was in the range of 970 to 980. Now it is on the verge of a major breakdown. And the level, the crucial support level is placed at 800. If it breaches 800 levels on the lower side, then we might see a sharp sell-off towards 752 or maybe 720. So watch out for that. I would say a conditional sell. Here, sell below 800, keeping stop loss above 825. Target would be 760 or maybe 750 on the lower side.
All right, fair enough. Nilesh, thank you so much for joining us and taking us through your views on the markets. Promises to be an interesting day, certainly. Well, there you have it. Those are Nilesh's views on the markets as well as a handful of trading ideas. But with that, we shift focus to the primary, now secondary space, that's office space, which lists at a 13% premium despite weak market momentum. My colleague Harsh Saita spoke to the company's chairman and MD Amit Ramani about the expansion plans going ahead. Listen in.
Our model a bit different than the traditional conventional model of taking space on straight lease. What we term as managed aggregation, right, where we partner with our landlords, essentially in a profit share and a revenue share model, which does two things. One, a majority of the capital our landlord partners put into the space. And second, it mitigates the risk because now my landlord is my partner and he's obviously sharing part of that risk with us. We have been able to scale this at a very, very large scale, 169 centers live as of December. out of which almost 100 plus centers are in this managed aggregation model. You asked about the capital investment. Well, the capital investment, if we are putting in 100% of the capital, could cost anywhere between 90,000 to about 100,000 rupees per seat, right? That's on a basis of about 50 square foot density. But because of the model, our landlord's partner put in a majority of the capital, as I explained, and because of that, our cost is almost half of the industry. It's about 50,000 rupees a seat. Now, in terms of fitting out the space, typically the space fit out could take anywhere between 60 to 90 days, depending on the scale. Our typical size of our centers is about 30 to 35 thousand square feet. So that typically takes us about 60 days to fit that out.
Understood. Very interesting. And are most of your clients on an annualized kind of revenue model, or is it more walk-ins?
So both. So Harsh, clearly I think when we started the business in India from a demand side, we were solving three things, right? One was accessibility, and that's why we have the largest network in India today, 169 centers across 16 cities, 52 micro markets. We have a big presence in 7 tier 2 cities as well. So from that standpoint, one, we were solving for the accessibility. Second, the ease of use. Somebody can use it on a plug-and-play basis. And because of this solution, today our demand could be a customer taking an hour of a meeting room, or a customer taking, let's say, 1,000 seats for 5 years, and everything in the middle. Today we have 2,300 companies that are resident with us. Some take it for a day, some take it for 5 years. Our overall tenure of our client companies is 33 months. The locked-in tenure is 23 months. So a lot of stability on demand side in terms of predictability, but we give the full convenience of accessibility, flexibility, and ease of use to our customers.
Understood. Got it. And with regard to just margins on top line, once an asset is, say, stabilized, I want to try and understand it more from a stabilized asset perspective. What's the kind of margin number that one looks at? And while you are growing, this second part of the same question, what is the kind of margin one can look for?
So, Harsh, clearly, I think if you look at our current portfolio, overall, we have about 70% occupancy from centers 1 day old to maybe, since the inception of the business. So from that standpoint, also our centers, which are 12 months or older, are sitting at about 83% occupancy. At a center level, it takes us anywhere between about 6 to 7 months for us to stabilize the center in terms of occupancy, reach 80% plus, and that we have done. Any center that was launched in fiscal 22, we were able to get to 80% plus occupancy in 7.5 months. Now, the margins that you asked about, they are different for the two models that I explained. One being the straight lease model. Typically, the margins there range between 30 to 32% at the center level. On the other hand, in managed aggregation, the margins range anywhere between 20 to 22%. Now, the margins in managed aggregation are lower, but the return on capital employed, because my landlord partner is putting majority of the capital, could be as high as 200%. In a straight lease model, typically ranges between 30 to 40%. So that's the margin profile. And as you said, going forward, now obviously I would not like to comment specifics on the going forward margins, but today, if you look at our stable state portfolio, our today EBITDA margin for the 9-month period, we had a revenue of almost 616 crores. Our EBITDA margin was 195 crores, and our cash EBIT is almost 67 crores. So I think those are the metrics that I would like to highlight, and clearly we will continue to grow. We have declared it clearly that this year we will add 45 new centers, close to about 30,000 plus seats across those centers. So the growth will continue for the business, and we will continue to add our tier 2 city presence as well. We are in 7 cities. We will add Guwahati, Vijayawada and Lucknow. So from that standpoint, we will do. today the managed aggregation versus straight lease model is a split of 66% managed aggregation, about 34% straight lease. That profile will continue, and obviously operating efficiencies and operating leverage will come in as we continue to scale up.
Well, that's the management of office, and with that we slip into a short break, and on the other side we get to the management. Stay tuned, we'll be back in just a bit. Welcome back. This is the F&O show, but we are taking stock of Brigade Enterprises and the quarter gone by. Now, we have seen a stupendous run on the entire realty sector, and Brigade Enterprises has, in fact, been a participant and had given returns manifold over the course of the just last 12 months, not unlike many of its peers. We've seen a considerable amount of momentum building up with respect to the entire real estate sector. The question really is that where do we go from here? Well, we are in conversation with Pavitra Shankar, Managing Director at Brigade Enterprises, who's joining us on the show. Pavitra, good morning. Thank you so much for taking the time out. My question then, to start off with, is exactly that. We've seen a lot of momentum being built up over the course of the last 12 months. The financial year gone by has been very, very strong for your company. Where do we go from here? What are the expectations when it comes to FY25?
Hey, thank you for having me. And yeah, it's been a fantastic year for Brigade. And I think the outlook also is extremely positive. We are a developer across residential, office, retail, and hospitality. And while a lot of the focus tends to come on the residential sector, I would also have to say that the office segment for Brigade has done extremely well over the last year. We are completely leased out despite having a very large contribution from the SEZ portfolio. Our hotel sector is also doing extremely well, so very good occupancy and ARR levels. And on the residential side, we've been able to show growth with launches coming into launches happening, as well as the absorption in terms of inventory and ability to also increase price. So we see all of those three trends continuing in the coming year, and therefore we're extremely positive about it. We've been showing that through aggressive growth in our land bank and trying to push as many launches into the market as soon as possible, given that the customer demand is supporting the velocity with which we can sell as well as absorbing pricing. On the office side as well, I think leasing has been pretty healthy in our portfolio, but now we'll be looking to lease up some of our newer space that's under construction. And on the hospitality side as well, we are looking to add another 1,000 keys over the course of the next couple of years. So overall, very bullish. We are focused on markets of Bangalore, Chennai, and Hyderabad, and we intend to stay focused on those markets. Maybe look at tier 2 cities in South India, but these are our areas of focus.
Pavitra, I'm reading a handful of reports which suggest that inventory levels at the moment are considerably low when you compare the current inventory levels as against last year. However, at least one pocket of the market is also expecting a little bit of saturation as we move into the next few quarters. Well, there is a suggestion that there could just be an increase in supply, not just for your company, but perhaps the entire sector and in the markets that you operate in. What is your reading in this case?
Yeah, I think it's just a natural part of the cycle. You know, this is an industry where it takes quite a while to sign up land and then get approvals, design and put the inventory into the market. So it's anywhere from 12 to 24 months. So naturally, the reaction tends to happen as a little bit of a lag. If one is lucky to have inventory that we can launch into a strong market, then that's fantastic. That's the best case scenario. But typically, there is always going to be some kind of lag. So for us at Brigade, we look at, what is the visibility we have over the next 3 to 4 years as we're signing up projects, and what are the assumptions that we're making when we take on new projects. So naturally, I think we do have to expect that there will be a cycle at some point. But when we go into that cycle, does Brigade have the right parcels of land? Do we have the right type of product that the customer wants to pay for? And that's why we feel we've been able to maintain a leadership position over the last almost 4 decades. And we think we'll be able to continue to do that. So expecting the market to continue at this pace is great, but we also have to always keep in mind that should things shift, we're still in a position of strength at that point. That said, I still think the next few years will still be very strong. I think we have to be careful in terms of how much price appreciation we are trying to underwrite and ensure that the product we are giving to the customers is actually something that they want, whether in terms of sizing, specifications, or naturally in the location in which people are looking for space.
Pavitra, before I come to you, just addressing something that we have from the IMD, and the news is that the monsoon is upon Kerala. And when it comes to the northern regions in India as well, we are looking at, an update and an advancement when it comes to the monsoons. Of course, positives. So in line with expectations, we did know that, and we had an understanding that monsoons had, there was a little bit of preponement, if I can say that, and that's exactly how things are faring. And that will perhaps be a positive when it comes to sentiment in the markets, especially when it comes to the consumption and the rural sector. But Pavitra, coming back to our conversation here, could you give us an idea on the pipeline that you have at the moment in terms of projects that Brigade is working with?
Yeah, so we have a pipeline. We look at it as the next 4 quarters on a rolling annual basis. So we have around 16 million square feet of projects in the pipeline. About 12.5 of that is from the residential sector, spread across Bangalore, Chennai, Hyderabad, and Mysore. So a very diverse set in terms of geography. We also have around 2 million square feet in the office space that we're planning to launch, and around 400 to 420 keys from the hospitality sector. So we are very excited about the projects coming in across all domains of our business, and we expect to see these entering the portfolio over the course of the next 12 months or so. For the office and hospitality, it means that we'll just start constructing on these projects, but when they